The FARS Committee meeting for Wednesday 2nd of March 2022. We have quite a busy agenda. Welcome everyone. Thanks for adhering to the various rules we have to. And for the record, we have quite a few participants of our meeting on Zoom who will be pitching in from time to time. Okay, so I'll start, if you like, with a karakia, and then we'll just go to our agenda. We'll flag after this a small change to the agenda. So if you want to join with me, our karakia, please. Off we go. Whakataka te hau te ke uru, whakataka te hau e te tonga, ke mā kina kina uta, ke mā taratara ki tai, e hihe ana te arakura, e tiho, e hoka, e hahu, tihe, mario. Thanks everybody. We do miss Perry whenever he's not in the room. Just quick, any developed or new conflicts of interest anyone wants to register on items of this meeting, which are in addition to those that they've already registered, if any? Not, thank you. We'll continue on. Just flagging, are there any issues anyone has with the minutes from the last meeting? So I'll just go quickly to those then. Can we confirm please the minutes from our 15 December 2021 meeting? Those that were present, I'll move that they are true and correct. Could I have a seconder for that please?
I'll second.
Jackie, thank you so much. Moved, passed. Now, a small change to the original agenda. We have Andrew here to talk us through some items, and I'd like us to go into to public excluded. There's a phrase I need to use, isn't there, Leanne?
There's a resolution there that we need to...
I don't have that on this one, it's right at the end somewhere, so...
I'll move to go into public excluded.
Thank you. Neil moves that we move into public excluded to discuss a matter. I imagine for those that are watching, that matter should take about 15 minutes and we'll be out of public excluded and back to our previously published agenda. So I'll second that. Are we in favour? All right, thank you. Passed. Can we now please...
Are we?
We're back online and we're in a normal meeting again now. So on our agenda number 4, no, that's not right.
Yes, it is right.
It is number 5. Our 6-monthly enterprise risk report. I imagine that's Helen's going to lead the charge on that one, is she?
Yes, yep, we're just
Helen?
going to throw straight over to Helen for this.
Thank you, Jess. Helen, the floor is yours, and off you go.
Thank you very much. I think, I guess, the way of introducing this paper is to point out that risk is about uncertainty on objectives, and I think the supporting material in the risk report is probably key to this risk report, which actually highlights the level of uncertainty, particularly in the external environment that all organisations are operating in, and even since the time of writing this report, the situation has changed, both with COVID-19 and moving to phase 3 of the response, the government's response domestically, which probably almost has sped that risk up, and it's almost at a tipping point, I think, of actually probably reducing. We also, at the time of writing, there was a little bit of tension building at the time between Ukraine and Russia. Well, that's obviously significant, potentially has significant impacts now, particularly around the sanctions, and we talked about, cyber type attacks as well. And also within the supporting material, we talked about there is a bit of information in there around climate change and action delays given these other significant uncertainties that are happening, and as countries respond to those uncertainties. And then the IPCC report came out subsequent to this being written as well. So I think in terms of reflection in the risk report, what we can see is a shift in general of our risk profile to a higher state, and in some cases there is no actually additional controls that the organisation can put in place. It's a matter of watching and responding as we can. So if I just take you through some of the risks that have elevated. The first one is the financial risk. Again, here we're just keeping watch. The finance team are obviously monitoring this closely with the ELT. I guess some of the influences there are the domestic inflation rates and also the geopolitical tensions and what that's doing with the financial markets. So that risk has been elevated, and like I say, there's not a lot of additional controls that can be put in place. It's just that monitoring piece. Business interruption. This is about the impacts that this may have on our ability to deliver on our objectives. Initially, this was elevated given the response to Omicron outbreak, which at that stage was around significant isolation impacts, and that's probably shifting to isolation is still reasonably significant, but I guess illness is now spreading as well, so it's how the organisation can manage that. Tied into that is really in addition is the tight labour market and staff turnover, so that adds another level of complication. That particular component has been captured under the people capability risk though, which has some activities that we are doing to try and reduce that risk, but as you can see, that risk has been elevated as well. And the potential for the people capability is that it could continue to cause business interruption as we try and deliver on our strategic objectives. And the other component within business interruption that we have captured in there is the supply chains, as we have responded to the COVID outbreak supply chains have been disrupted. That could also continue now with some of those sanctions that are happening globally as well. So we have put a lot of effort into talking to our key suppliers and making sure that we have got enough stock or supplies on hand for at least a 3-month period, and we will continue to monitor that as things progress at the 2-month period. And the other risk that I touched on that has increased is our people capability risk. Now, we've kind of looked at that almost around three ways, short, medium and long-term sort of aspects. And I guess the immediate risk or the short-term risk is obviously the tight labour market. And that is actually driving the assessment at the moment, the almost certain component of that assessment. There is activities that have been undertaken, and it's looking at what the organisation has got in terms of all projects, including sort of those PEP projects, and checking that we're actually working on the activities that are most significant to ensuring we continue with meeting our strategic objectives for the year. And in addition to that, there is a people leader forum that in this retention will be a key brainstorming activity in a couple of days. And I think Liana will be able to talk more to that. She's going to talk to some of the papers anyway. In terms of the medium aspect of that risk, this risk was already elevated in the last report because we had an audit done around the maturity of our talent management system, and that is now being worked on. I guess in the medium term, as those activities roll out, that will help reduce this risk, although it may not necessarily completely reduce the risk in terms of the short term or when the market is competitive. And then we've looked at the longer term aspect of this risk, and in Olivia's update around proposed audits, we're proposing potentially an audit around looking at our corporate plan and how we can collaborate. What we've had in the past is a lot of reviews undertaken around maturity of our management systems, and each of those have come out with activities that need to be undertaken. We can work these frameworks in the corporate space, but then at some point to embed those, it takes effort and actions within the operational business. So we're kind of working out how we can collaborate to prioritise the biggest things that will enable the operational business to work smarter. And so it's actually that's kind of a longer term review around how we can work, improve the people capability, but work collaboratively particularly around these management system maturity aspects that do end up being embedded in the business. So that kind of summarises the changes and the increase in the risk profile overall for the organisation. One of the last comments I've got in there is we don't specifically have a climate change risk, because climate change is weaved into just about every single one of particularly the strategic risks and some of our operational risks in terms of our assets and infrastructure. So in business interruption. So we have got the climate ambassador now. So over the next period, I will be working with her to sort of unpick that to make sure we have got that represented correctly, or whether for aesthetics we may need to elevate that as a separate risk. But at the moment, it's certainly either a cause or an impact on each of these risks, enterprise risks. So it's certainly at the forefront of those risks. So I think that's pretty much the summary of the risk report.
Thank you, Helen. It is a comprehensive item, and it's very, very important. It's great that it's all coming together. It's now almost starting to say, okay, we need a cover sheet of all these cover sheets because there's a lot to absorb and go through here. And the most important thing to me is actually most of these risks aren't new. But we're now identifying how they may impact this organisation. And a lot of good work. I'm just going to go around the table and ask if anyone has particular points. I have quite a few myself. Can I ask that our discussion, just around this part, just separate the impact of financial market risk at the moment and just look at the operational side of things. And at the end, I'll just touch on it because we do have a larger discussion later and around with the Treasury policy, etc. I don't mean to not have that conversation now, but just at the first instance concentrate on the operational business as usual stuff. And anyone, of course, can make any comment they like, but just so we don't double up. So I'll just start with Councillor Taylor. You've gone through the report. Any thoughts, comments or concerns that you may have, Jacqueline?
Yep, thank you, Chair. I do. So I think what really stands out for me, which you've covered very well again, I just want to also say, as Mr. Chair says, it's very comprehensive, so a lot of detail in this, so thank you for that. But to me, the risk that really does stand out is people and capability with the shortage in the labour market, staff turnover and so on. So one thing that stood out in your short-term immediate risk is to reviewing all strategic and smaller team projects and perhaps put a pause on some projects that are not going to disrupt the delivery of key strategic objectives. I think I just wanted a little bit more on that, you know, how you are going to determine what is a smaller project that can be paused. Yeah, just a little bit more on that, thanks.
The intention, and James, please step in, as I understand, is that these will go back to the ELT and we will be reviewed basically with a risk-based lens around what these projects are impacting and how closely they link to those strategic objectives. So there's a stock take at the moment, I believe.
James, have you got a comment there?
Yeah, so we've recognised that in recent times, as the organisation has grown, we've introduced a whole range of initiatives that support the growth and development of the organisation in terms of its capability, and that cumulatively that is placing a reasonably significant burden on the delivery part of the organisation. That's our, particularly the managers and team leaders that are managing our staff, delivering in the field and delivering outputs for the organisation. And what we're trying to do is ensure that we've got a schedule and a program of work across those initiatives that's digestible for the organisation and that is realistic in terms of the continual change that we expect from our staff as we evolve the business to meet future needs, really. We've got those sort of pan-organisational corporate initiatives alongside a significant number of strategic projects which have come out of the long-term plan, both the last long-term plan and the current long-term plan. So cumulatively, that's an ambitious program of work and change on the organisation. So what the leadership team is doing is taking a stock take of that, getting a really good sense of the impacts cumulatively on the business, and then we'll make some very conscious decisions about how we program and schedule that over the next few years.
Thank you.
You done?
Yep, I'm done.
Thanks, Jacqueline. Thanks, Helen. And it is important to note, Helen, you tend to be the kind of the facilitator and aggregator of these reports, but actually it's input by the entire senior leadership team. So yes. That is what makes it a particularly powerful document, and really does strengthen it. Will, have you got any observations?
Yeah, thank you, Chair. It's a little bit hard to know where to start with what's going on out there, but I agree, we'll probably just concentrate on the financial stuff and papers to come. First question around the risk to business operation with the isolation rules. To me, I understand they've changed and close contacts are only now household, not business workers. So does that reduce that risk?
Sorry, was that directed at me, or I can?
Whoever wants to answer.
Yeah, so I think since the time of writing, we were actually, when I wrote this report, only looking at like going into phase 2, and pretty quickly this risk has shifted in terms of how the outbreak has panned out and the response. So yes, it does, although my guess would be it changes what's driving this risk. The isolation, there's still isolation and illness issues, but pretty quickly that's potentially going to go down. But then what's going to happen is we're going to change from response to recovery, I guess, around the Omicron or COVID-19, which means borders are going to open. What does that mean in terms of it could put more pressure on our people capability risk as people decide to shift away because they've been stuck in New Zealand, or alternatively it might mean that we can recruit people back in. So yes, I agree that because how fast moving the uncertainty is when we're navigating it, but it just creates a different level of uncertainty at the moment that the management have to sort of look at and try and work through what that means for the risk.
Great, thank you. And just also on the mandating of the vaccinations for employees, have we let anyone go as a result of that, or have we been able to place those staff in positions working from home in the short term?
That's probably more for the CEO.
So we haven't had to let anybody go at this stage. We've got the small number of unvaccinated staff working from home at the moment, so we're continuing to accommodate that and starting to work through what transition back to working out in the environment looks like. So that's a live conversation right now. We did have a couple of staff members leave us of their own accord who were impacted by that policy, but they didn't have their employment terminated, and we were certainly willing to accommodate them working from home, but they made their own decisions.
Okay. Stephanie, on Zoom, have you any thoughts or observations, particularly the talent side of things, although I do note we've got a separate item on that later on, but I welcome any thoughts or observations you have on anything in and around this enterprise risk report?
Thank you. Yeah, and I'm happy to leave the HR related queries for later in the meeting. I just had a couple of queries on not necessarily the ones that are specifically highlighted in the summary, but more going through the report itself and just looking at some of those other risks, like around legal compliance, for example. Am I able to? Of
course, anything that's in that report, and this also feeds into our next item. So, you know, you've got a very generous chair in the seat today, so go for it.
Thank you. So one of the queries I had was around the legal compliance, having that residual risk assessment of likely based on some information management storage and destruction processes. So I was just keen to understand, does that mean that there has been an issue with some kind of breach of legal requirements, or what the detail is there? Because it concerns me a little bit that with the controls in place, that it would still be considered likely that a breach of legal compliance would still occur.
Or could occur. Yeah, Helen, could you respond to that, please?
Yeah, so look, I think, and perhaps we can revisit the assessment of likely. Or the context of how we've the materiality of this risk. We do, from time to time, have small things that happen. We had one where there was no, our systems are actually picking up the the likelihood of something happening. What we had, and I think it's in the front of this report, is in one of our areas we did have information that was being stored not aligned to guidelines. Obviously our systems, our check systems actually picked this up when we swept across some of the information, and we remediated that and put that into the right place and space. It wasn't particularly material, but obviously it can result in some sort of form of non-compliance. And I think perhaps it's a good point, is perhaps looking at the materiality of this risk. In terms of the mitigations around this risk, we have actually now sourced a whole raft of corporate obligations that we, as an organisation, need to make sure we comply with. That list is, I think, off the top of my head, nearly 200 deep. So we're actually looking at, over the next few months, it's actually sitting with my team in my area, is how we can risk assess those obligations and start making sure people are aware, the managers in those areas are aware they're the obligation owner for the organisation. A lot of those, they're fully aware because there's like specialist technical areas like the finance area and tax and that sort of thing, but it's probably more in those operational businesses to make sure that if that obligation owner sits in the operational business, they have clarity around that obligation. So that is a significant piece of work that we're actually starting to undertake, and over the next probably 12 to 18 months, 2 years, we will continue to strengthen those compliance plans.
Okay, thanks, Helen.
With awareness.
And that starts to say, well, that's interesting. That's a whole another briefing on the work you've just been describing right there. So that'll be interesting. Stephanie, you had a further point in this? I think you said you had 2 or 3 points you wanted to raise.
Yeah, just another one. Thank you on the fraud point also, around some of, and I don't need a lot of detail, but just and perhaps some background for me around that residual risk and what you're actually measuring there. It talks about at the beginning around that fraud would go undetected, as it could go undetected as a likely risk, but then it talks about the residual risk of the fraud itself. So just a little bit of background for me on what it is that you're monitoring there, and in fact, is it really likely that fraud could occur as an inherent risk? I wouldn't have thought that would surprise me.
Helen.
Yes, so in terms of your second question, inherently the likelihood rating of likely, I think it depends on circumstances of the environment at the time, but all organisations, I guess it is likely that fraud at some level could occur without any forms of controls. So we have a number of controls, and there is a fraud audit that is going to come back through to the committee. We've just received a copy yesterday, so I haven't had a chance to look through it. From what I see, we're in a pretty good position when I looked at the very high level picture at the front in terms of our controls that we have for fraud, and particularly with some of the finance systems and things that we have now put in place around Tech One. Yeah, the residual assessment of this will be informed better next time in terms of what the audit has revealed to us. But from what I can tell, it's pretty reasonable that controls that we have in place, they're pretty fit for purpose, particularly the detection controls around STAs that we do, or suspicious transaction analysis or data analytics, whatever you'd like to call it, that occur. The biggest thing for fraud though is the tip-offs. Staff, most fraud is detected in an organisation by staff tipping off. And I do know the report said that staff are comfortable to come forward. I guess the piece that we probably need to do going forward is a bit of a roadshow to remind staff what those red flags are that we'd like to hear about.
Thank you. Thank you. Stephanie.
Thank you. And how do you know that staff are comfortable to do that? Is that something that comes out from some sort of survey or because it's happening?
That was one of the points I just read in the audit that came through yesterday, is that, after they had spoken to staff, they were very aware, particularly around the protected disclosures, and were comfortable. So, that was pretty good reassurance that came through in the report.
Thank you. Thank you, Helen. Stephanie, any further points on that one, on the report?
No, thank you. That was useful.
Thanks very much. Councillor Curtin.
It's all above my head, way above my head.
That's not a big ask, mate.
I no longer know where to look, actually.
Yes.
You made a comment, and so did Councillor Foley, to that extent. And I'm just a little bit worried that that our processes around risk assessment and management are almost becoming so esoteric, and and I'm wondering, are we at risk of our risk management framework actually becoming overwhelming? And I struggle to, I don't know where to look. And so therefore I don't. So I go back and switch CNN on and watch that.
Okay. Well, but that Helen, it's been raised a couple of times there. There's a lot of information. The concern is, and noting that I'm a huge champion of this stuff, but that it comes, the various risk reports, etc., come a reason to be in themselves, as opposed to they're just a layer across the organisation, which once implemented should be pretty seamless. And there is a lot of work. So can I suggest that I mentioned before, almost a dashboard of dashboards, just a couple of pages perhaps highlighting those issues that you particularly wish to be highlighted, or in a more abbreviated form. When it's a very, very important report, hopefully one day it just becomes part of our furniture. But when these reports create a huge attachment in their own right, it does tend to can get lost. However, it's just the way we present the information. It's all really very, very important. And two items here have their separate agenda items anyway.
I just wonder...
back to Neil, Councillor Curtin, yes.
I just wonder whether James might be able to help out. I'm interested to know how the leadership team in the organisation respond and react to risk both ways, particularly up and down. And that's been my it's all very well having a framework, but if it's not going up and down, we're not gathering, assessing risk at all levels of the organisation. So here are a couple of examples. We had in the last year or year before almost now, the TB issue. I'll just use that as an example. So we needed that to have come forward. We've got deer as a pest coming through as a significant issue, Chilean needlegrass. We've got our Manuka honey scenario. We'll discuss that later today. So to me, these were enterprise risks that I would like to see our risk framework pick up earlier and lift up to the attention of the leadership team and governors. And I'm not clear enough in whether the framework we're using enables the team to do that or not. I've got this comprehensive report, but I still don't know.
I get the sense that the bit that the committee's most interested in is our operational delivery risks. And I think what you're being presented with here in terms of the framework is a very comprehensive, but at risk of being overly high level set of risk assessments that particularly also relate to the external operating environment. So I can see that you're notes, Councillor, on the page that relate to things like regulatory reform, natural disasters, global situation. I guess just with respect to that, the comfort I have is that we document as an organisation the fact that there are significant, global and national forces occurring which may have an impact on our business, and we're not blind to those, and it's certainly true that the leadership team discusses with some regularity those and the impact on them, particularly things like government reform. But recognising where we get bitten, if you like, are in our operational delivery risks, where as an organisation we're charged with a statutory function, or that we've taken on a level of service as part of our long-term and annual plan, and we don't deliver for some reason. And I recognise that for Council generally, as well as this committee, that's probably the area of most acute concern. We have focused very heavily on our reporting on the inputs to the business, so I guess our corporate underpinning infrastructure, but probably where the maturity of this risk assessment needs to go is into those operational delivery areas. Helen has been working with parts of the business through the champions, the risk champions, to do the mapping of the risks in those operational delivery areas. But I think there is a way to go in terms of us challenging our assumptions, and I think the examples you give in the biosecurity space are good ones, because to some extent they're a consequence of us not knowing what we don't know, and also testing, I guess, some of our default policy settings and things like the regional the regional pest management plan. So with respect to TB, I think we reasonably blithely is probably too strong a word, but we relied heavily on the residual trap count data from the possum monitoring over a very broad scale, and we're comforted that because we were seeing no significant deterioration in numbers at the regional scale, that we didn't have a problem. And of course, as it turned out, we had localised problems that the monitoring system didn't pick up. So a good risk assessment would have suggested to us early that our possum monitoring program had some limitations. As a consequence of those limitations, there are some risks, and that's something we need to keep an eye to. And of course, in that case, we didn't. So I think you raise a pertinent point for us to go away and reflect on. And I'm interested in, I guess, us coming back at a later date with perhaps a more fine-tuned view of how we identify those core operational risks, where we make assumptions based on our policy and our operational settings that may be overly optimistic or may not adequately account for uncertainty. Hopefully that's helpful. That's good.
Thanks. You done there, Neil, for the moment? Thanks very much, Helen, colleagues, and James, for that. Look, as I said earlier, I'm a huge champion of this stuff. But again, it's the way we present it. I think we just need a little bit of work. But we just must acknowledge, and Helen, when we do, wander through and maybe change some of the ways we present it, we make sure that included in that is some of the things that it's flushed out. Because you've just mentioned, earlier, quite a few issues or potential risks that could have fallen between the cracks, or we weren't really aware of, or haven't really played around and modelled pertinent to the organisation. At the end of the day, this is just about keeping this organisation, and therefore ratepayers' operations and balance sheet, as safe as possible. But don't underestimate the need to just keep a good record of those things that have been accomplished. Can I just ask a few questions, James? You might want to pop into some of these. Just on the report there, Helen, on 5.5, or James, basically this is the bit about potential supply chain issues, and you talk about the council and you touched on it earlier. Is CDEM included in that? So if there was to be some issue, you've had a look at your need for supplies and stocks of all sorts of things, but you don't mention CDEM. So are they included in that, or is that a separate bit of work?
No, they are included within that, yeah.
Great. Oh, that's good to know. Okay, thank you. Helen, your comment about climate change not specifically being a risk because it's a risk right across the organisation, very apt. And And thank you very much, and I'd say that we'll need to be reminded of that quite a few times in the future. Number 9, corporate, what have I written there? Is HBRIC included in this? And I realise they're a separate entity, but this is all around the decision-making processes of this organisation and what you need to abide by. Is HBRIC included in your lens of risk analysis or not? Helen or James or Jess? It's pretty yes or no one.
No, it's not specifically included in the formulation of this particular profile. Okay,
great, that's fine, thank you. All right, I have a series of questions later for your in and around the incident reporting. There's just couple of things here. In your enterprise risk report, attachment 1, page 14. Excuse me, I'm just. What am I looking at there? No, that's okay. Okay, look, I'm fine with that. Helen, if you're just taking on board particularly the larger discussion and around presentation, and all good work, but it's a lot harder to have a shorter report than a longer one. We all realise that. Can I seek a mover for the 6 monthly enterprise risk report, please, Jacqueline? Thank you. Will Foley will second that. Thanks very much. That's passed.
Can I say something, please, Chair?
Certainly. Any comments?
Yeah, just a comment again to you, Helen, that I think given our unstable economic, financial, climatic environment, again, I just want to commend you on upskilling and risk-based thinking. I think this is really important at this time. So although very comprehensive and lots to read and certainly more work to be done on how we analyse risk, you are taking the right steps to ensuring that this council considers all risks. So well done. Thank you.
Thank you.
Thanks, Councillor. Okay, we'll move to our next item, which is linked to this.
Chair?
Leanne.
Sorry, we need to move to item 8, is it? The
9, the
9,
annual audit
item
report.
9, because Karen Young is only available from 10 till 10:30.
Okay,
If we can,
okay.
she's joining us on Zoom.
Well, okay, so everyone, we need to just put pause on our agenda. Our next item 6 is linked to the previous discussion. So hold the various thoughts that we have. We do need to move to the Audit New Zealand. We have Karen Young from Audit New Zealand online. She's coming at 10 there, and are you online there, Karen? That was a bit of a false alarm, Leanne.
See, you're online.
Yeah, but Audit New Zealand aren't all that timely on a number of matters.
Sorry.
It is only just 10 o'clock, so maybe she's dialing in now.
Yeah. Okay, well, let's start our discussion about on our agenda, item 6, which is the risk maturity update. Oh, hold on. There she is there. Karen Young, I see you coming in. That's her down the bottom there, is it?
Yep, she is. She's just joining us
There
now.
she is. I can see her. Welcome, Karen.
Hi, Chair. How are you?
Very good, thank you.
How's everyone?
We're all good. Hope you're as good as can be. And someone made a wee joke about Audit New Zealand being late again. I think you're 30 seconds past 10 o'clock.
Sorry, yeah, I had a back-to-back meeting.
No.
And there's a lot of racket outside because our offices are in Molesworth Street where all the action's happening at the moment.
Oh, really? Well, good to see you there and not involved.
Yes.
Karen, thank you very much. I'm just flicking would you like to make some introductory remarks? Really, those things that have changed since we last spoke. So the headlines are, unfortunately, we have yet to receive a signed off audit from Audit New Zealand. We're about 3 months down the road, I think. We all understand most of the reasons why, but we have been given some soft deadlines in and around that. And it does have ramifications for this organisation. So I wonder if you'd like to just set the stage there for a wee bit, and then I'll just ask of our leadership team, particularly our finance people, and maybe CEO, if there's any ramifications of that. We do appreciate the work you're doing to try and get things through as quickly as possible, as best as possible, and you're a servant to other powers that be. But at the end of the day, you're our only interface with Audit New Zealand.
Yes. Well, thank you, Chair. I think you've summarised it well, actually. We have got one elephant-sized matter to resolve, waiting on advice from our technical team to resolve that matter. Perhaps I could just explain what that matter is, because we're talking about a potentially material prior period misstatement.
Yeah, so just hold on there for 1 second, please. I just want to seek advice from James and Jess. Are you comfortable that we continue the discussion in open forum, or would you like us to go to excluded? I know what the matter is. It sounds like you have some things to add to that, Karen. James?
I think my preference would be just to do it in public excluded while there are material uncertainties around the treatment of this.
Yes.
Okay, I understand that. We do go into public excluded with reluctance, but let's just hear what you have to say. Jess, are they your thoughts?
Yep, happy to do that, yep.
Colleagues, are you comfortable with that? This is an issue we've discussed before. Okay, I'll move that we go into public excluded for the duration of this discussion with Audit New Zealand. Can I have a seconder, please? Will Foley, thank you very much. Councillor Foley seconded. Just hold on a sec and wait till we're out of This, how are we off for breaks and things? Leanne, my agenda's all over the show. 11 o'clock, okay, so we've got a few items. Let's see if we can charge through. So, is Helen still with us? Yes, she is.
Yes.
We were up to the, what was it, the risk maturity update, item 6 on the agenda that we have in front of us. I'll just lead off on that if you like. I've just highlighted a few things in your report. Kind of take it as read alongside your earlier bits of information. So there's good stuff in there in that, looking at your 3.1, which kind of starts to answer how does all this risk stuff work in the real world, and you've said you've reported a risk champion within each group, and no doubt I've got a badge and a clipboard or something, but that's these tick-offs of process. You've now done the bow ties for all of the areas. I think there were 13 of them from memory, and you've had a session with the strategy and governance team identifying the processes to go through. So tick, 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 that's all good stuff. As far as I'm concerned, just let me just come back to, that's pretty much all from me actually, but any further comment anyone has in around. So again, remember where we started on this risk stuff, and that from a governor's point of view, needing the confidence that someone's had a lateral view across the organisation, fresh eyes have had a look at stuff. We can't prevent all sorts of things, but we can manage how this organisation reacts to them. And again, repeating from earlier, maybe we just have to have another look at the way this is presented up so we don't lose the room with 87 pages of stuff. We just keep them engaged, and particularly those things that have changed or are important to them. And as you note, individual councillors particularly have areas of strong interest themselves. So I'd say as we think about that and the way things are presented. Anyway, thoughts, comments on the risk maturity update around the room. Stephanie, I'll put you on the spot. Any further thoughts? As I said, feeds off the earlier report, but go for it if you do.
Yeah, I think at this point, reading through all the materials, which are, obviously a huge amount of work has gone into and a lot of thought, which I really appreciate. But I think at this point, given the volume and being indicative of the scale that this project is undertaking, I picked up on one of the comments in the paper around the strategic fit and making sure that the risk management system contributes to achieving those strategic goals. And I think that's a really difficult balance to get right, to make sure that that risk management system does contribute to achieving those strategic goals and doesn't sort of distract and create a competing workload that distracts from that delivery. And I think that's probably demonstrative of the stage that the council's at, because it's such a new piece of work and a mind shift, and so having that change management process will be really important. So I guess from an outsider's observation, it's more of a thought around just making sure that as that transition goes towards getting all of these sorts of things bedded in, it'll be interesting to watch that culture shift and make sure that people are picking it up in their normal jobs and actually being able to focus on the core delivery of what they're meant to be doing. But it's such a difficult balancing act at the moment, I think.
Yes, it is. Yeah, totally agree with that. Will, any thoughts on this particular item, or Councillor Taylor or Curtin? Will?
Just that. Actually, Stephanie just kind of directed me to it with that point 7, the intelligent decision making, enabling the efficient prioritisation of finite organisational resources to deliver on strategy. I mean, that's kind of what no doubt James and the team here grapple with every day, but us as councillors out there, every time someone comes to us with a issue, and particularly when they're singularly focused on an issue, saying why aren't we
Yeah.
why aren't we solving this? And you know, trying to get the point across that there's so many things out there to achieve and solve. It's a difficult conversation, but yeah, that statement there just sums it up for me.
No further questions.
Yep. All right. Okay, thank you. Well, there's a recommendation there. Thanks, Helen, to you and your team and the leadership team for pulling all that together. It is really, really helpful. And again, it's another demonstration of how this organisation's kind of stepped up quite a bit in the last 2 or 3 years in its various reporting frameworks, etc. As you'd expect, an organisation that turns over $105 million per annum should already have in place. So the recommendations there are 2.1, 2.2. Jackie, are you happy to move those recommendations?
I'll move that.
Will, you'll second those? You seconded those? Okay, in favour, thank you. We'll take those, and that's passed. Leanne, was there anything else we needed to pass earlier? Maybe just have a look at the public excluded stuff. I'm not sure if we received a report or not. Okay, risk maturity, internal audit, item 7, internal audit. Who is this? Who's speaking to this one? Jess, is it? Hi. Yeah, is there a microphone up
Helen,
there?
do you want to take this one?
Yeah, here she comes.
I think Olivia's in the room.
Oh, Olivia's here.
Yes. Thank you. I'll try and keep this as brief as possible because. Okay. The first paper I'm going to talk to you about is the Internal Audit Annual Plan Status Update. This is an oversight of the current year.
You're good. You got a microphone to speak into? Yes. Okay.
Oh, there we go. So this paper is an oversight of the current year's internal audit status for 21-22. As agreed at the October 2021 FARS, we would be carrying out 2 audits. That was the fraud management audit and the data analytics. The fraud management, as Helen indicated earlier, has been received as a draft last night and will be brought to this meeting in May. And the data analytics will be completing a 10 months report of Tech 1 commencing in May. That's as far as we've got at the moment. If you have any questions.
That's great. Could you just expand on that, what you just said at the end there? A 10-month report on Tech 1. So that is that about the implementation of it, or
No,
now that it's up and running?
No, that's the data analytics. That's the standard report we do every year. And I know this has been up for debate in the past of whether we do it yearly or 2 yearly. But right now we will be starting it from May based on July last year to May this year on the data analytics that's available to us.
That's okay. That's fine. In your list of background and discussion there, you're looking for us to consider and approve areas of interest there. So, I note infrastructure and asset management. That's featured quite intensively.
Sorry, that's the next paper.
Oh, I'm ahead of you.
Yes.
Oh, okay. Sorry. Would someone like to take?
This is just the status for this current year. So.
It is too. So it is. Yeah. Excuse me. Okay. Right. Well, would someone like to take the floor, take the lead there, Jacqueline? You seem to know a bit more about this one than me.
No, I'm just on the right page. No, not really. I think it's satisfactory what you've presented, so I'm happy with that. Thank you.
Well, Neil. Okay, just going back to Tech 1 though, and the data analytics. But there will be a bonus in this, and that would assume it would be an easier way to undertake such an audit because you've got an enterprise-wide system.
Yes.
So hopefully, as it's slightly beyond this audit, but if you could comment it somewhere along that way, and that the process was easier, perhaps, or less complex because of this. And that, again, it's just the benefits of the investment that we've been making in such systems.
Yeah, hopefully that will be reported when they come through.
Okay. All right. Well, thank you. Stephanie, you okay? Okay, great stuff. All right, well, there's some recommendations there. Stephanie, would you like to recommend that those are put forward? And Neil, are you okay to second those recommendations 1 and 2? All good. Thank you very much. They are passed. Thanks very much. Now, this other item I've been so keen to get to myself. Make sure I am on the right one. Annual Internal Assurance Plan 2022-2023.
Yes, and with the attachment of the universe.
That's right.
Yep.
I was just looking at the items there, and you note under infrastructure and asset management, although it's limited to an extent by the Three Waters reforms. So could you just talk us through that a little bit as to, is it worthy of doing? Maybe you should wait for the Three Water reforms, or it's more intense, or how you're held back. And then there's another item which I wondered if you'd pondered, is that's financial, and that the ability of the council to manage its various financial assets.
The item that we've discussed in item 2, your question on, is the actual current trends that Crow have submitted.
Yes.
And we haven't got any further detail on those right now, but we will be providing more detail at the next meeting of what those involve.
So they'll be presenting back to us.
Yes,
as they
Crow
have
will
in the
be coming
past.
to the next FARs in May.
Yeah, and one thing about this, colleagues, is council officers recommend, Crow recommends, they're all more than valid, but what's also interesting is what councillors or committee members are of interest or recommend. And so I invite others to think about that. Thus my question in around our ability under the financial side to deliver upon our expectations, given things financial are probably going to occupy everyone's minds for the next few months at least. So we'll have that larger discussion when we have Crow next time.
We will, yeah.
Okay. Just that 2.3, the infrastructure one from Crow, that's recommended. Noting that Crow also do these for a lot of organisations, similar organisations, do you have any thoughts as to, I'm not kind of predating the discussion next time, but we'll do an audit, although it might be a limited audit because of the Three Waters reforms. That's what that says.
Yeah.
So if I'm spending ratepayers' money to do an audit, which may be redundant, do you contemplate that, the pragmatism of that? Or Hastings Council may be going very intensely on this particular part because it's of huge concern to them?
I don't think I'm in a position to say on that one. That would be down to our executive leadership team.
Yep.
On what decision, and this council committee to make those decisions on which one we go with, after looking at the detailed information that Crow supply.
Okay. Do you have any thoughts in this space? It does get confusing with all these audits and things that we have. There's a great table there somewhere of the summation of Section 17s and all the various audits, which is really, really helpful. Thank you. Well, if not, and Stephanie, sorry, I just can't see on the screen. You okay there, Stephanie? So everyone's relatively silent on those recommendations, which are all about reminding of us of our purpose, to report this back up to CNS, to receive the various reports, and just slightly, if you can remind me, if we approve these recommendations,
Yes.
at our next meeting then, we'll have similar recommendations with possibly an open discussion about, are there any other areas you'd like us
Yes.
to do?
Yes.
That's the bit I keep getting.
That's the bit that we would like next time.
which is the danger of when I get presented these, I just think you're telling us what you think.
Well, there's
Audit, which is
also at the
valuable.
next meeting, as Helen mentioned earlier, there's a possible audit that the ELT will be recommending on the corporate side,
Yeah.
which will be given more detail on.
Yes, in fact, that was
a discussion after this paper was
that
written.
was quite an
So-
interesting item. She said that right at the end. That's exactly right. Well, can we just enrich this paper? Oh, sorry. When we discuss this larger item next meeting, there is just have something in there and/or items of which are of interest to this committee in particular.
Yes.
Okay. So these are recommendations, which is great. Others may have something particularly pertinent to their interests as a councillor that they'd like to have audited or looked at. Okay. Well, subject to that, then, we're going to receive and consider the draft annual assurance plan report from staff at this stage. No, we're going to have a larger discussion about it at our next meeting or so. Are we okay in agreement with that? Councillor Taylor's
Yeah.
recommended that and moved it. I'll second it. So be it, it is passed. Thank you. Leanne? Yeah, our union guy's not here today, so I need a bit of help. Yeah, I'd say we just break for tea. Okay, we're just going to break for morning tea, and we'll be back in 15, 10? 15, 20 minutes, depends if I've got to boil the kettle or not. Meeting. Back everyone. Thanks very much. We now move to item 10 on our agenda, the quarterly Treasury report for the 1st of October, 31 December 2021 quarter. Would you like to lead us through it? I imagine there'll be quite a few questions or larger commentary in and around this kind of larger item. So let's see how we go. So please, after your briefing, please allow quite a bit of time for further discussion. The floor is yours. Who's going to lead this one? You are, or Jess is, or?
I think Ross is potentially.
Ross is at the table.
So we have for you, each quarter we have a more detailed report from our advisors, PwC. You have a summarised report from officers, just to give you the feel for where things are at. Not going to highlight anything particular. It's probably better just to deal with questions as they arise.
Okay. Oh, well, thank you for giving us that time. Well, not sure if you're here earlier, there was discussion around the risk matrix and framework and around the organisation. And we separated out the operational business as usual stuff with the implications of basically global events on our balance sheet, and of which a lot of this, it's a little bit of hindsight stuff, but things have moved materially on since that quarter. So you've got a lot of commentary in there. Financial markets, particularly international markets, continue to move around. It's worth noting that, if I'm right, that's not foreign exchange risk, because under agreements we hedge all our FX risk. So this is just the equities themselves moving around. Is that right? It's just equity markets?
Yeah, it was obviously the whole portfolio, because there's a mixture of equities, property, and a reasonable chunk of that is overseas domicile and local markets as well, obviously, because
that's right.
Local markets. So
I think our policy is FX is hedged, isn't that right?
I would think it's normal for councils to have that. I haven't got it right directly in front of me, but yeah, we wouldn't deal with FX risk.
Yeah.
Sorts of events.
Okay, well, just be interesting to confirm that.
Yeah, the portfolios themselves, the individual assets wouldn't be hedged. So there would be fluctuation in the valuation of overseas equities, for example. I would expect there to be a component of exchange rate changes as well as the value of the equities or assets themselves.
That's right. Okay. Well, I'll just kick off then, going through the report. So just a quick headline for those that are watching. The organisation turns over about 105 million a year. Its rates contribute about 18 million a year, I think.
About 34. That's that.
Oh, it's not fair.
I think it's more like, about 34, because it's about 16, 18 targeted plus general.
Sure. So there's quite a gap between what we gather in rates and what we turn over. Some of that's supplemented by borrowings, but most of that's for capital projects. But there's a key item there, and you mentioned at paragraph 24, and that the council has budgeted to receive 10.1 million in dividends from HBRIC within the 21-22 year. Given the various the volatility that is referenced elsewhere in the various reports, how confident is the organisation in that in fact will be received?
I don't know whether Jess wants to jump in. I don't have a lot of detailed knowledge on HBRIC and other.
And just for this organisation, I'm a director of HBRIC, but I just want to put all of this on the record here, that the council's confidence in the revenue it's expecting, it is very confident that it gets or not.
Yeah, so I think we have quite good certainty around our HBRIC dividend for this current financial year. HBRIC's carrying fairly sufficient cash reserves at present, so we have relatively good certainty around the likelihood of receiving the full dividend for the current financial year. Probably the real risk is around our investment income from managed funds from the portfolio. So this report obviously is reported up to the 31st of December. Had an update from Tim Chaplin this morning to say the managed funds have dropped $6.1 million since the 31st of December. So obviously there's a time delay from the from the quarter that we're reporting right now to the present day. So we'll report a bit more financial, I suppose, commentary around the financial impact to the Corporate and Strategic Committee next week or the week after around, the forward-looking, I suppose, projections around the current financial year.
Thanks, Jess. And that's obviously, there's a material information, i.e. that 6.1 mil that you just described then. Is that the funds under HBRC management, or is it the funds under HBRC and HBRIC?
That's the total portfolio.
So both, the group.
Yeah.
Okay. Yeah. Thank you. And I think later on there'll be a discussion, well, what are the implications of this, if any, for our LTP, et cetera, et cetera. Can I just ask you a question about item para 40, which says under investment property, the council budgets to utilise the annual rentals of 841k to offset rates each year. So are the total rates 841k?
This is,
Ross?
we're talking about the total rents on the Wellington leasehold portfolio are 841k.
Yeah. Yeah. So all the money's in, go out the other door to rates, and you just look at the capital gain on.
So the capital gain is banked from an accounting point of view, but it's actually not used to offset the rating requirement currently for that portfolio.
Yes. So it's a zero holding cost of those. If we get rent in and most of that goes out in rates, is that?
No. The rent that we get in is our revenue, and its offset means we charge less, 841,000 less to our ratepayers.
Ah, I see.
We don't have any costs.
Offset.
We don't have any costs against that rent.
I read that as Wellington rates, Wellington City Council.
No. It's offset against our rates.
Very exorbitant organisation down there.
It's an income for us, which actually means we have to collect less rates.
All right. Well, thank you for clearing that up. I'll move around the table. Start with Councillor Foley, and then yourself, Stephanie, and then come back. Just questions in and around this. And bear with me, Ross and Jess. I'm more than relaxed for the discussion to be slightly wider in the report, simply because there's been such volatility since. And questions you have now will probably be questions you don't have at Corporate and Strategic. Councillor Foley.
Could I just start off with something Jess said? She could clarify about the HBRIC dividend. You referred to markets being down, but lots of cash in hand. Does that mean HBRIC tops up the dividend with cash if the returns aren't there? Is that what you meant when you said that?
So HBRIC have their own, they manage their own portfolio in terms of how they pay their dividends, so it's up to them how they construct, I suppose, their cash dividend, how they pass it through. So it's a combination of paying dividends through from the port, returns from their own managed funds, and they hold cash reserves. So how they derive the cash and how they choose to pass that through, they can actually borrow in terms of paying a dividend up through to council is the decisions of the directors of HBRIC. How they choose to pay the dividend is up to them. But I think we're fairly comfortable that they have sufficient cash reserves at present in order to meet their dividend expectations for the current financial year. So they have divested managed funds previously that are holding sufficient cash reserves to meet their dividend requirements for the current financial year. And they're fairly comfortable that they can meet the demands at present time without having to divest any further managed funds in the current financial year.
Okay, thanks. Point 4, around the financial markets. Staff advice is to watch and wait at this point. Corrective action is not required. What would corrective action look like if that's what you were recommending?
So corrective action, I guess, being changes to the SIPO in terms of adjustment to the portfolio, in terms of an adjustment, I suppose, to the change in allocation of equities or selling down equities or readjusting, rebalancing the portfolio at this point in time. We do have the ability to do that at any given point in time, should we wish to.
So rebalancing can mean realising losses or running with them, whatever decisions are made. Okay. Okay, well, thanks. Stephanie, oh, there she is. Yep, Stephanie, go ahead.
Thanks, lost my mouse. Just a question on what will happen if if the current trends continue and it ends up being a loss year in terms of those investment portfolios rather than positive returns. What's happened in the past in terms of good performing years? Is there an accounting treatment of what's happened to those funds, or have you taken some of those funds out and realised some of those profits to pop somewhere else more conservative, or what's happened previously to give us some options in this kind of scenario?
Yeah, unfortunately, we're still in quite early stages in our investment journey, I suppose. So we're only sort of 3 years in. In an ideal world, we would have been, in sort of terms of being in such volatile times, we would have had a few more years under our belt and sort of built up a reserve fund. So that's what we had intended to do, and that in years that we would have achieved higher than forecast returns, we would have put some of those returns into an reserve fund where we would have sort of had a rainy day fund. We would have been able to tap into those funds in years where we wouldn't have achieved a return in line with our forecast or our budget. I suppose we always have options. We can borrow to bridge the gap in years that we don't achieve the returns that we have forecast. What we'll have to do is, I suppose, when we have a look at our half year results, we'll have to look at whether or not we actually look as though we're going to, what the full year expenditure looks like in terms of budget. We might be behind in some of our expenditure in our work programs, so we may look as though we won't spend as much as we had forecast for the entire year in terms of delivery of it on some of our capital programs or our full year work programs, so we may not need all of our investment income. We may be overachieving on some of our other income requirements. It may be unlikely, but we do have other options available to us. But then again, the market has proven that it can return and it can bounce back quite quickly. So I suppose that's what we mean in terms of watch and wait for the next quarter. So we have seen in previous, in the last financial year or even in the last 2 years that the market has we have had quite strong recoveries even within 6-month periods. So it might just be a case of sort of coming back in the next quarter and evaluating what some of those options are and having a look at what we might do.
Thanks, Stephanie. And it goes to a larger question about the passive or non-passive management of assets, either under this council or its agency, HBRIC. So HBRIC's, in that instance, actually made decisions earlier and did realise some of its profits and sold down. It's not that active, but it's more active than the council. So I think it's a very worthy and larger question we should address at the end of the day. The danger in all of this current space is everyone has hindsight, and it's what's happened tomorrow is more important. But we just need to make sure we have the right culture and systems in place to keep true to our long-term plan. There, Stephanie. Jacqueline Taylor, Councillor Taylor.
Hi, Jess. You've pretty much covered a lot of my questions. You can imagine it's all around managed funds. What really stands out, can you just first of all just confirm funds under management? There's so many figures all thrown around. Is it 167?
From who? Council?
Under Mercer and Jardine altogether. We've got funds under management at the moment is...
It's on page 52.
Just double checking, yeah. So one of that 167 mil, you have budgeted to withdraw to support council operations 3.7 million. That's definitely not going to happen with a $6.1 million loss, and the market isn't going to bottom out in a hurry, I don't think so. So how much is that $3.7 million that you would have withdrawn to support council operations? how is that going to affect council operations, the budget?
Yeah, so I suppose just to clarify, the funds have moved backwards 6.1 million since the 31st of December, and I suppose that was just to demonstrate for effect how much the market shifted. At 31 December, the funds were up significantly, or they were up, I suppose, from the 1st of July, which was the beginning of the financial year, and we were seeing gains through the first half of the year. So I don't want to, I suppose, lead you astray in that actually we have actually, I don't want to say that we're down 6.1 million for the full financial year. We will need to come back next quarter and let you know what the, I suppose, position is at that point in time. So in the tables in the paper, I think that demonstrates that we did actually have funds available. You can see there that we had current group value above the capital protected value available was actually 6 million at 31 December. So what that probably indicates is that we probably currently have almost nothing available right now. So we're not actually short 6 million. We're probably sitting about flat based on current value as at today.
Yeah,
So
but
we actually,
yes, I'm aware of that, but also your outlook for an annual
yeah.
return isn't as hopeful as the year before.
no, it's not. Yeah, that's right. Yeah, so I just wanted to clarify that we're not 6 million, I suppose, in arrears as at the current value. So we did have a little bit of upside in terms of what we could have recognised at the 31st of December.
I guess I think it goes back to, it's great to be optimistic and all, but if this market continues to fall, again, back to that question, $3.7 million you've budgeted for to support council operations, how are we going to deal with that if that's the case?
It's already there, we've already got it.
Well,
Yeah.
okay.
So we can either carry an operating deficit into the next financial year. We can borrow to cover an operating deficit into the next financial year. Okay. We do have options in terms of funding our net funding requirements. We'll bring some narrative through to corporate and strategic when we look at our half-year financials in 2 weeks' time, in terms of what our intentions are to cover any potential financial net funding requirements.
Cool. And also, I just wanted to say thanks for including the peer group analysis as well for fund managers. I think that's really important, just to keep an eye over the fund managers you wish to sit with, invest with at this volatile time.
So Jess, you're saying you believe you have the cash available to service the organisation throughout the next year forecast period, but the value of our investment portfolio has been stressed significantly in recent quarters. Eventually those two meet, but they're quite separate at this point of time. So as governors, you're giving us the assurance that we are quite solvent as far as cash is concerned, and you'll come back to us if there's any further questions. Councillor Curtin.
Thank you, Jess and the team. I just want to say that this is an exceptional Treasury report, and I'm so pleased that you've been able to pull together the many moving parts in Treasury, and here we see it here really well articulated. So thank you for that. I think our Treasury function is growing all the time, and it's I'm just comparing it to another one I'm involved in, and I spend hours trying to tease through it, but this is really easy to do. So thank you for that. I've just got just to clarify our position, and that goes to the executive summary in the PwC report at page 57. So that just during that 2 quarters, we've made a withdrawal of 1.3 mil from the PFIF fund. So that's correct, isn't it? So we've returned that to council as part of the dividend from HBRIC to across the whole portfolio. Is that right?
Yeah, that was a withdrawal by HBRIC itself, so obviously it delivered cash to HBRIC.
Yep, so
which it can use for dividend or whatever else.
And the 3 portfolios have returned 3.9 during the quarter over that quarter.
That was, yes.
So that's sitting there in cash reserve at the moment.
Well, it was as at 31st of December. It's part of that accumulated 6 million as at 31st of December.
Sure. Okay.
That's in the table on page 52.
So in fact, we've got if you like, the position at 31st of December is 6,023 million above the inflation adjusted figure. So we've got that essentially as a bit of a buffer sitting there.
We had that as at 31st of December, yes.
Yep. Okay. Likely to have been eroded substantially.
Correct.
Okay. Just a comment on the two portfolio managers, Mercer and Jarden. Is there any comment, perhaps Jess, on the respective performance over the 3 years, the 17.1 return versus 19.1? Is that, do you regard that as significant? How does that look?
Potentially, maybe we could talk to that. I think there is a paper further on in the agenda around the review of the fund managers, which might be relevant for us to talk about that.
Yep.
Yeah.
Okay. Just turning to, this is on page 59, the investment management report. You read there that the summary of the assets under management, the inflation adjustment figure is at a rate of 2%. So I'm just noting, is that the CPI? The inflation figure we're using is the CPI? Yes. Yep. So given that it's running at 5.9, what's the, when do we adjust that figure to reflect the current inflation rate?
Question. So it's at the moment we've just been losing a long-term average of 2%. And we were using 2% when inflation was below that. So it's probably a discussion which might link to your later discussion.
Sure. Okay, that's fine.
I would have thought the year-end balance state would be the appropriate time for making those adjustments. Yeah,
that's a good point. It's something that we have and will continue to raise with PwC as part of our ongoing conversations with them on a quarterly basis.
Yeah, so I mean at the moment that's sort of three times below what's actually happening out there. So we might have to review that. Sorry, just going back. There was a detail in your staff report. It's paragraph 36, and there's a reference there to the council's rent deferral scheme for leasehold land. Who's our current leasehold land expert amongst the team? You're it?
Ross.
For now?
Well, you're just the man, Ross. I wonder whether you could remind me. I can't remember the detail of the rent deferral scheme and the level of flexibility around it. Can you help me there, please?
We have a policy in place whereby someone can apply for deferral in the case of financial hardship. I haven't got a lot of history on previous applications. I do know there are some people actively talking to us about the possibility of that at the moment. I designed a form to try and get them to fill in based on the current policy. I think possibly needs to be a discussion to actually probably get a bit of better guidance for officers in terms of how that should, data should be interpreted and how it could be applied, so it's probably a work in progress, but we have some active ones this year because, as you would imagine, the property market has moved considerably. So people who are getting their rent renewals, we've got half a dozen properties which probably equal about a dozen owners or more who have been served their notices of rent review this year. I did a calculation, the average increase is 650%.
Yes,
And this is the impact of having it. Obviously, it's a 21-year lease, and that's one of the issues that they come across, because it stays the same, rent stays exactly the same for 21 years. Then it gets reviewed, and like where they might have had a relatively low rental, it's a significant increase.
Okay.
For them to
Just
deal with.
if I wonder whether it's worth, Mr. Chair, bringing back a bit of a paper, a bit of a review of that, so that I'm just aware that the councillors may not. I've got some history in it, going way back, and I'm still a little bit confused about this.
Leaning on you for your history would be useful. And I think that would be good for the organisation and for the officers to assist them going forward.
So if we could look at what it currently is and what potential options there are, because it's causing such significant distress for a small number of people, but nevertheless distress. So if we can bring that back, and I'd be also interested, I can't remember what the ACC contract limitations are on that scenario.
It doesn't stop us doing it. And the interesting thing about the contract is we pay over cash received, not what we invoice.
Oh, okay, that's good.
So that's one thing about the wording of it is stuff that's sitting there on deferral.
Yes.
We don't have an obligation to pay that over to ACC. We don't pay the money over it until we have actually collected
Received it. That's a good place to be. I'm pleased with that clause in. So if can we look at that coming back to us reasonably quickly? I'm happy to
Hopefully
talk
next
to
meeting
you
would be the appropriate.
about some of the history that may be helpful. So that'd be great. But thank you, Chair. That's
Thanks.
Again, I repeat it as an exceptional report. Well done.
I mean sadly, the brutal reality of the cumulative price increase of anything over 21 years suddenly arriving can be a shock and a surprise to many, anybody. Can I just ask that when you do enrich that other discussion, just touch base obviously with the team to not complicate things potentially further with Audit New Zealand and around the item that they're interested in when we look at the details of the contract. With what you just said about the contract there, invoice versus cash, just keep it simple.
Well, obviously, we have to, in terms of administration, we are bound to stick exactly to the terms of that contract.
Oh, I know, I realise that. I didn't realise that, but I'm not sure if you're party to that discussion earlier. So, okay. Can I ask a question, please, around on the PwC part, which is the report there. There's a note, their item 10, cost of funds versus budget. What is our cost of funds for this organisation, cost of capital, whatever you want to call it? So there, page 18.
What they're referring to as cost of funds versus budget.
And their explanation below?
Effectively is linking to our debt, the cost of servicing the borrowings versus what we budgeted.
I know what it is. So what's the yield? What's our cost of opportunity cost, or whatever you want to call it? Because they're saying here a decision was made not to prepare it because we've put in a new financial system. That sounds a bit weird to me, because it wouldn't have changed regardless of the financial system.
Are they saying that information wasn't available, and as opposed to?
Yes, data not available due to the decision being made to not prepare financial statements due to the implementation of a new financial system. That does sound a bit curious for an organisation.
It's more, work had not been completed in terms of pulling information together for the half-yearly report, which is still to come to next meeting.
We're a little late for getting together the half-yearly financials.
So they are being prepared, but at the time of the finalisation of this report, they were not ready.
Okay, so their narration there is just sent me down the wrong rabbit hole.
Yeah.
So they need to talk to someone who has plain English expertise. Jacqueline, you could teach them a thing or two, I'm sure. Okay. All right, so are there any further comments or questions? It is hard because it's a snapshot at 31 December. And then what are we now? 2 months in. So there's a lot of further discussion once we scratch away at this and have a look at our various systems and policies, I guess. But at this point in time, unless anyone else has any further questions in and around it, we've had the assurance from Jess on the cash side of things. Our brows are very worried about the balance sheet side of things, as is everyone. It would be very good to have a more in-depth discussion about that, hopefully at CNS perhaps, when this gets presented back up or in a wider forum. I'm sure councillors are very interested in what this all means, and to be fair, it's ratepayers' balance sheet, so their balance sheet has taken a hit. And as long as we're doing everything we can to mitigate that, then that's absolutely fine. Okay, Ross, any questions of us? Should we ask you something and haven't?
There's nothing that I'm aware of at the moment.
What's the worst question we should have asked you?
I'm not telling.
Oh, good answer. Okay. All right. I'll just skip it. Is there some recommendations there? I guess there is. My Stella's just flowing. Who's got the paper in front of them?
Receive and note the report and to confirm that the performance of council's investment portfolio has been reported to the subcommittee's satisfaction.
Yes, okay, recommendations 1 and 2, page 54, I think it is. I'll move those recommendations. Stephanie, allowed to, she's part of this committee. Stephanie, you've seconded that, have you? Hand up, yep, thank you. Okay, all in favour, passed, aye. Thank you, Ross, thank you, Jess.
Just a sec, Mr.
Oh,
Chair.
one moment.
Do we need to make a note at all, or we're just happy with Ross to come back on the leasehold?
Sure, Leanne has made a note.
Thank you.
Note amongst ourselves. Yeah, it's a good topic. There's been a bit of correspondence along those lines. Okay, item 15, funnily enough, linked to this, is our the parameters under which we review our fund managers. At this stage, this is for HBRC, but an instant question I have is this done holding hands with HBRIC, who have very similar fund managers, or what? Jess, is it Jess, this one for you to introduce?
Yes, sorry. I think we do have Kishan online.
He's online, yes he is.
Paper, but he's home unwell today, so he might be feeling okay to join us.
I'm good to go.
Good to go? Are you good? The video is not working, or is the onesie not appropriate? Okay, well, between you and Jess, can you lead us into this, please?
So this is something that has been on the work program for a couple of quarters, but we have got just a very high level paper up today for the committee. So it's really just a draft scope, which we've provided for your feedback, and hoping to incorporate your feedback into sort of a more formal scope, which we'll bring back next quarter, to formalise really the scope for a review of the fund manager's performance. So we think that it's timely to, I suppose, to enter a more formal review process of the fund manager's performance now that we are entering sort of the 3-year cycle of placement of the funds. And yeah, I suppose the paper is there, and yeah, we don't really know how you want to approach it. If you want to sort of go through question by question, and happy to take your feedback on what we've presented.
Okay, well, I'll start. Thanks for that. Just as that question was, if this was to be, if we did do this evaluation, Keishan, is HBRIC doing this in conjunction, or HBRIC not? I'm just not sure if...
I think it would be prudent to do it together so that we are not duplicating. So it would be evaluation of the fund managers,
Okay.
just as a whole, I would say.
Good stuff. Okay, thank you. Just the paper starts with following a robust procurement process. How do we know it was robust? Who says it was robust?
Felt robust at the time. So we had external advice around the process, and it certainly was a fairly robust procurement process that we entered into. The whole council was involved in the procurement process of the fund managers. So
it was an open tender or something like that, was it? Was just...
Yep. We went through an open process at the time.
Right.
Invited a range of potential candidates in.
Okay, thank you. That's fantastic. That's all good. Did we look beyond New Zealand, or do we only look at local fund managers at the time?
We did just look at New Zealand-based fund managers. Yes, we did. Yeah.
Okay, and are fees a key criteria, or how do they weight given service and things like that? So what was the key criteria? Net fees back to the organisation, or what?
Yep, fees were definitely one of the criteria, but not the only criteria. We were looking at ethical investment. I suppose looking at probably, if the committee was interested, we could have a look at bringing out part of, the criteria, the assessment criteria, and bringing that back out for review. If you'd like to have a look at what the procurement process that we followed in the initial process.
Well, I'd certainly think it should be considered. Who am I to say what should happen, but other than if we're considering the significant sums under management, some of which is on global markets, therefore, if just double checking the criteria of decision making, and if fees are highly rated, net fees back to us, well then I think we should cast our net wider, and maybe that will help sharpen the pencils of some local organisations. Just a couple of things, and then I'll pass around. Just page. I'm just jumping ahead of the gun a bit, but you're recommending that far as we perform the strategic asset review, which is currently 50% growth and 50% income. Can I just suggest that when we do go further, we just have a look at what's a kind of acceptable criteria for an organisation like this and its time frame? Because it's very binary, 50 growth, 50. There may be some bottom lines for this kind of organisation, which should always be 75% conservative, which ties up with our long-term plan. I don't know, other than the example given to us there is a very black and white choice. Does that make sense?
I suppose, just to clarify, we're not looking at the, I just want to be clear that we're not looking at the investment strategy itself. And this, I suppose the review, we're looking at the review of the psycho separately to the analysis of the performance of the fund managers.
No, 8.1 in the scope for fund manager review. Performs a review of the strategic asset allocation. It's currently 50% growth, 50% income on an annual basis. So the next part of the question is, annual seems very short to do this, given just what we've seen. So again, I don't know the answer, other than I'd suggest that might be a bit too short. And then finally from me, I asked that one about H-Brick, which Keishan asked. Do we need to formalise that, invite or let H-Brick know that we are going to do this, and if we do engage some independent counterparty, who will pay, how was it paid, etc.? Do we need to sort that out at some stage?
So share the cost with H-Brick?
Well, possibly. It's just that's my question earlier. I don't know what the answer is, other than it does seem to make sense. Rateco's point of view, only pay for things once. But having said that, the attachment you've given us someone's criteria for evaluating. I'm just not sure if we need to get us what's the kind of the cost of that. Who gave us that report? Report examples from someone.
Yes, it's from PwC. We haven't got a costing yet, but we can tailor these reporting to suit the needs of the business. It can be as simple as we want, or it can be as in-depth as we want. So I guess we can suit the reports depending on what budgets we have.
Okay, well, I look forward to those numbers, and also suggest that's linked into decisions around passive or non-passive management. How sophisticated we need to make those decisions. Anyway, I'll pass to Jacqueline Taylor.
Thank you, Chair. Just a couple of really short questions, please. Just going back to the criteria, just because the Chair triggered that in my mind. Do you consider ethical investing with the fund managers as a criteria option when you select your fund managers?
Yes, we did, yeah.
And the other question I had is just given we're in balanced funds, but would you be considering moving money into conservative or moving funds? Is it a consideration to move into conservative given the current market volatility? Has that been discussed?
Can I answer that one?
Thanks.
Yep, go for it.
Yeah, so the 50/50 asset allocation is based on certain considerations, and the current cycle says that it's based on council's capacity to accept risk. That's one of the criteria. The second criteria is the willingness to accept risk, and the third one is the required rate of return. And we have scored all of those on a moderate, and so based on that we went with the 50/50 asset allocation. So I guess the question to council is if any of those criteria has changed, then that asset allocation changes as well. So, which is why in my paper I recommended doing it yearly. And I think what I want to highlight is that the required rate of return. So if our rate of return increases, then obviously the fund has to take on more risk in order to meet that return.
Yep, thank you for that.
Okay.
Might need more, I mean, we just watch what happens and consider review if necessary.
Yeah, we already have, as a council, we have policies on ethical investment in our mission statement somewhere.
Okay.
And I'm pretty sure that criteria flowed down to these particular organisations. They flow through, but it'd be worthy. There's a bit of discussion around that at the moment.
Great,
okay.
Thank you.
Councillor Foley?
Yeah, not sure if I've got any further questions to add, but more just, is this purely about this particular paper and review? Is this purely more about the fund manager we choose to look after our funds as opposed to following on from Councillor Taylor's question, more about what we're actually invested in?
Yeah, I think this is more, I think the quarterly Treasury report that we report through to you is very much a review of how the funds themselves are performing in terms of how the financial markets are performing and what's happening in that space, and less a review around how the fund managers are performing against their peers. So what we're proposing here is that it's a little bit more of an approach around how are the fund managers themselves performing against their peers in the market. And this is an opportunity for them to know that we're looking at them against how their peers are performing. And it's good practice for us to be doing that on a regular basis. And it's a formal process for us to do that, and it's for us to decide whether we do that annually, or do we doing that 3-yearly, or we're doing it 5-yearly based on the type of fund that we have, but I think it's good practice for us to do that on a regular basis, and for us to be checking in on what type of fee structure they have. Is it competitive compared to how other fund managers are structured? And for us to be assuring ourselves that we still have our funds placed with competitive fund managers in the market.
Right.
Okay, you're based on that. The one criteria I'd certainly highlight would be the longer track record, certainly not looking at just, say, past 12-month returns, but, as long out as you can go, particularly with the environment it looks like we're heading into in terms of economic conditions, going right back to the last sort of economic shock type crisis years, and, seeing how those managers performed.
Okay, thanks. Stephanie, got any thoughts or comments there?
Yeah, I do, thank you. Just in terms of looking at those recommendations and what we do quarterly, I like the current report that we get. I think it gives a good snapshot. If you're looking at the one that we've got in this meetings pack, it's well set out. I find it pretty easy to follow, which I really appreciate. I wonder about the sense in having too detailed a report or a review process every quarter. I think if we're not going to change anything on a quarterly basis, I'm not sure why we would review it in detail. Otherwise, we risk making some kind of knee-jerk reaction. So while I'm all for looking at performance tracking quarterly, having a full-blown review of having the fund managers come in to speak and full reporting, I just worry. I'm not sure that there would be a lot of value to be gained from that, and it would probably be a lot of work for everybody involved, and not really lead to good outcomes potentially. Having said that, it sounds like it's a good opportunity now to have that 3-yearly review of who the fund managers are, what the SIPO says that the investments are doing, what they say they should be. So I guess it's almost two issues. What are we doing as a general review and going into that real level of detail versus what needs changing on a quarterly basis. From my view, I don't think anything should change from what the current report is. I'd be happy to look at something maybe 6 monthly or annually, comparing the various funds. But my feeling is Jarden and Mercer are pretty reputable outfits, and I wonder about utility in doing a full-blown comparison quarterly.
Okay, thanks, Stephanie. I'll pass to Councillor Curtin, who's got some questions and points around this place, and I note we've got an item which Councillor Foley's very interested in, particularly on forestry soon. So over to you, Councillor Curtin.
Thanks, Chair. I just want to echo Stephanie's view on this. I just think we've got in front of us a little danger of overthinking this, and I was surprised to see the staff recommendation around including a review of strategic asset allocation that you referred to, Chair, at 8.1. I don't think we should do that. I think it's a matter for the SIPO discussion and not part of a discussion around the fund manager. I think they're separate issues. But turning to the issue of performance of the fund managers, I don't think we're in any danger around the current managers. I think the evidence is there. They're tracking pretty well close to all of their performance requirements. I think we need to reflect in looking at Councillor Foley's comments there as well. Is this as a long-term investment? I don't think it's up for politicians to get down in the weeds in terms of the strategic asset or the asset allocation of the portfolio. So I'm really wanting to say let's not do that as part of this review. And further, I'm really questioning whether in fact this is the time for the review. I'd rather leave it just sit on the table for at least another 6 months.
You got any comment to that, Jess?
Yeah, I think I'm happy to leave it on the table for 6 months. I think maybe the end of the calendar year would be a suitable time to do a formal review or start a formal review of the fund manager's performance. I still think that would be appropriate time-wise. I think we could still formalise the scope of a review over the next quarter and the next 2 quarters. So happy to take that feedback, but I do think that it would be worthwhile undertaking a review, particularly around the fee structure, because I think that there's value in doing so, and I think that any savings that can be made would be beneficial to the ratepayers if we can pull back some savings around fees being spent on fund managers. So, but yeah, very happy to take feedback. I do think that potentially reviewing the performance of the fund managers on a quarterly basis is possibly too regular, but potentially we could start looking at that internally on a 6-month or an annual basis and pulling that into the annual Treasury reporting that we report through to Council.
Well, can I cut to the chase then and say, what if we just leave this paper on the table, but we resubmit this paper for next phase, which is much closer just to the scope of fees in particular, just to that, because at the end of the day, it's incumbent on us to test value for money for everything that we do. This is just no different to anything else, and confine it to that and that prioritisation criteria that we discussed earlier, fees, gross fees, net fees, and anything else.
Maybe just fees and performance
Yeah.
against their peers.
Just
Yeah.
narrow it down. I think you've got a flavour here. Everyone, the quarterly is of interest, but someone's got to do it, and we've got to look through. But even that next paper, perhaps let's have a better a larger discussion around timeframes and the context, as you said. So are we okay with that? Just leaving it and narrowing it? Sorry,
Yeah.
Jacqueline.
I just wanted to add one thing as well. It's just that it's not so much about reviewing the fund manager, as Councillor Curtin said. I mean, I don't think that's so necessary as regularly as we're saying. I think it's really more a review of the fund we're in, and and you guys are onto that. So I hope and just keeping an eye on how other funds within that business are tracking. That's key.
So that's fine. And as that arises, we'll say our SIPO discussion, which says, look, this organisation's lens is, let's say, 10 years out. Therefore, the most suitable setup for us, we believe, is X, whatever that might be. And then things fall out from that. That's parallel to this fees discussion. Okay, we all comfortable with that, everyone? Okay, thank you, everyone. Jess, so we'll just leave that on the table and have another look at that paper next phase. Are you okay with that time frame? 3 year, you take a while to renegotiate or do whatever you're going to do. So the cumulative time frame there, am I pushing that out a bit far, or what would you prefer just as far as fees negotiations concerned?
Can I just point out that the current cycle is state review timeframes. So it does say that investment managers' performance will be monitored on a quarterly basis with a view to an annual evaluation of a rolling 3-year results. So that's one mention of how frequent we should be doing it. And there's another mention of it in the SIPO where it says the investment manager's role will be reviewed by council on an annual basis. In fact, taking into consideration will include investment style, resource organization, etc. So that seems to be more like a qualitative review that we need to do every year. But that is stated in the current cycle, which governs the managed funds. It's almost like the cycle review should take place concurrently alongside the review of the fund managers, because cycle dictates how the fund managers operate.
So the SIPO is the governing document which governs the management of the managed funds. So we should look at the SIPO first, really.
Okay, so we should look at the portfolio of things financial. One's the SIPO, that dictating document. That's where discussions at some stage, whatever the time frame is supposed to be for that around allocation. Then under that, we've decided to have some fund managers, but we want to get the best deal for the organisation. So that separate piece, which is just about fees and service, and then that criteria, that discussion, that's the bit I was saying, just leave that on the table until next meeting. But my question to you, Jess, was, that would mean probably if we were to change something or even confirm status quo, 4 or 5 months away easy. Does that fit with what we're obliged to do, and it starts to slot into your calendar year kind of time frame as well?
Fine. Yeah, comfortable with that time frame.
Neil, are you comfortable with that?
Well, it's just, for me, it's a matter of do we want to review the overall performance of the fund manager, or are we concerned about their fees?
Or both.
And if it's the fees, that's a much briefer exercise to undertake, and something we can have a discussion with them about in the interim. So I just want to be clear what we're trying to achieve and what's the actual requirement of the SIPO.
Well, the SIPO is paramount. I mean, someone could charge us 30% fees but have 400% returns, and we need to reference the SIPO. We can't do it in isolation. They are linked. So it's
Well,
not
I think
just
you'd want
the
to
fees
have a look at their performance. I think you're right, Chair. We would want to have a look at their performance in conjunction with their fees and their fee structure, not in isolation of.
So going through the eye of the financial portfolio needle here, we're obliged to do some things as Keishan's, in certain timeframes as Keishan just reminded us of and are in your paper. We're of a mind to have a look at these fees, which are incumbent. We can't quite do in isolation, but we're open to we're going to have a larger discussion around that. when are we obliged to revisit our SIPO? I thought we did that last year. How often's that?
Annually.
Yeah, so
Annually?
it does say perform a full review of the SIPO every 3 years.
When's that next due?
Let me just check that.
I think it's 2 years away.
I think the SIPO depicts that we should review it annually with a full review every 3 years.
So what's the difference?
And the next review date is 30th June 2021. But it does say or sooner if market conditions warrant.
Right, so there's the key. So
Flexible.
So annual review seems to be quite open. We can review parts of the SIPO annually, but we're obliged to do the full review every 3 years, which I think's 2 years away on this current cycle.
So, Chair, we do it certainly in line with the review of the funding and financing policies for the long-term plan. So obviously the SIPO's got to reflect our broader strategic objectives in terms of the funding and financing of the institution, and that is something that we do every 3 years. And I guess the annual check is whether it remains fit for purpose relative to those broader strategic objectives with the dynamic environment that we're operating in.
Okay, so where are we landing here? I'm of strong interest to us to look at the cost of others managing our assets, i.e. the fees. But of course, there's other considerations there as well. So we've got in June an annual review of the SIPO. The time frame I just talked about, potentially leaving this on the table, part of it seems to just kind of be coming together time-wise anyway. And I think we all agree we can't do it in isolation, but we're not trying to recreate entire SIPO or anything like that right now. So how do we move this forward? I suggest, how about we just leave it on the table as discussed. Another paper will come back here, even at CNS when we report up, this item might be raised, and we'll try and find more certain parameters around that. Okay? Oh, sorry, Leanne.
Sorry, Chair, can I suggest that you actually pass the recommendations that are there, which will
I'll take it upstairs.
do that?
Okay, yeah, well, their recommendations are relatively harmless. We're receiving the report that we got, which is just asking us for opinions, and we provide feedback, which we have, and we continue to do so. Next opportunity to visit this will be actually at CNS, and potentially they'll push it back down to FARS, next FARS. Are we okay with that? And so be prepared for a larger discussion at CNS, I imagine, Jess?
Yep.
Good, great stuff. Okay, thank you very much, everyone. Okay, now we go to item 11, the forestry update. There's quite a paper there. So you came second to the risk people on your use of paper, but I guess you grow trees, so that's a good thing. Would you like to lead us through your report? I know there's strong interest in parts of it.
Yep.
And so a few headlines, I think, assume it's read, and there are a few interesting questions about it, no doubt.
Thank you, Chair. So I'll just introduce, we've got Ben Douglas, who's dialed in. He's our forest manager, and also Russ, our manager for the open spaces portfolio, which is where our forestry assets are set for day-to-day management. So as you can see, it's quite a high level and broad summary of all of the forestry assets we own, the reasons why we have them, our priorities around our management practices, and some of the discussion particularly around some of our smaller forest assets. Look, they're all managed in accordance with detailed plans that Ben puts together, but really it's an opportunity to answer questions, so we will take the paper as read. We've got the team here to answer any questions you have, and I think it's just a good broad summary of our portfolio as a starting point for any future discussions.
Fantastic. Okay, just a few quick comments from me. Thanks so much for the paper. I learned so much about the assets, forestry assets, from this paper. Normal rules, it creates more questions than answers. I'm quite confused as to the treatment of the various assets, be it public good and financial and carbon or not, etc., and even some in there that are undervalued or unvalued. So anyway, I'll pass to Will first, who is of particular interest in this one, and normal rules, we'll go around the table and see where we land. Will.
Yeah, thanks, Chair. Look, I'd just like to
Into the microphone, please, mate.
say also, well done and thank you on the paper. Just a one-stop shop of the total forestry assets is, as the Chair said, it's very informative and you learn a lot from it. Look, I've just got a query around the carbon portfolio, the carbon or lack of policy. Admittedly, it's become a significant asset, perhaps wasn't so not that long ago, but just around the lack of a policy, you know, like we should have a policy, and so is there a plan there to address that?
Yeah, so there is. So I think you're right. In the past, it's been a lot lower value asset, but certainly with the current carbon price, it is of significant value, and there's potentially more demands on that asset. So, look, the recommendation is we move forward with a process to develop a policy. I think it's quite important, and it needs to go into the general work stream that Jess and her team have. So I don't know, Jess, if you've got any more comment where that fits in with your particular priorities.
Sorry, can you just repeat the question?
So it was just around, we've just highlighted in the paper that we currently don't have a policy around how we treat our carbon units.
Right.
That's something certainly that we need to develop in time, and it's, I guess, part of having our new CFO on board will allow us to work through some of that work stream. And it was just really a question of where it sits in the relative priorities, and whether you had any comment on an optimal time to work through such an instrument.
Well, no, I don't have any time frames to provide at this time. We'll probably, something we can come back on, I think.
So I think it is a priority, given the fact that we've got an intention to draw down on it this current financial year to fund obviously the climate change ambassador role. So we've put some framework, and obviously with the carbon price rapidly escalating, the value of the assets significantly increased in recent times. So it's overdue that we have a policy on it. So I would like to see it. It's a matter of urgency.
That's exactly right. So it has been in the LTP. I think it's a flag to be dipped into to fund this climate change ambassador.
Correct.
So I'm very reluctant to sell down some of that asset without having a framework internal, and that's Audit New Zealand would be comfortable with, to do anything with it. It's just to be on hold until such time as that's in place, rather than, I think, administratively, when we're able to make it work. I understand the strains on the team and all that, but just don't quite understand an organisation which has a carbon neutral as one of its highlights, doesn't have a policy in and around its own carbon assets. But anyway, back to Will Foley. Yes. Are you okay? You anything else in particular or urgent, or on another matter?
Not urgent on that, no.
Okay, all right.
Oh, thanks, Chair.
Thanks, Will. Stephanie.
Nothing from me on that one, thank you.
Okay, Jacqueline?
Are we doing the entire paper? Everything on forestry?
Yeah, it's a monster.
This is a monster.
Yeah, forestry.
I'm not really sure where to start because there was quite a lot in there, but I think the key issue that stood out to me is just this Manuka forest. Now I've got to find the page, but you'd probably know it off by heart,
Yeah.
Chris. Yeah, true. Just go down to it. Just the loss that we're incurring because of it. I mean, just talk about that a little bit more, perhaps.
So maybe just to clarify on the agenda, the Manuka plantation is a separate paper, so I don't know if the
I
chair
don't know
would
where
like
I've got
to
that one then.
mix the two together, or treat them.
No, we can come back to it if you want. Up to you, Chair.
Let's keep them separate for the moment. The link, same as the risk stuff, because it's on the same property as a bunch of trees. But
Oh, okay, I've got it here now.
yeah, so just
Yeah.
all these bits of pines and eucalypts all over the
Yeah. I think the only other comment I really had is just in some areas really where the radiator pine isn't really a necessity, and it would be really nice to see a lot of that turned into natives, which is a goal. Like I said, there's so much in here. I think it was around Waipawa or river berms from reading about it. Is that sort of where you'd like to see it go?
So certainly for the Tangoi forest and the Tutera forest, the management regime is to revert more into native bush over time. Part of the challenge of doing it all at once and very quickly is just the cost and the success of that reversion. So there's a very clear plan for those goals. And in terms of our rivers, we are doing some work on a strategic planting plan for our rivers. Traditionally, it's been rather ad hoc, and so that also ties into our public use of rivers work, where we're asking the community how they'd like to use different parts of the river berms, and then we'll come back to council with a comprehensive first cut plan of what we think is a good way to plant out our river berms, and then there'll be opportunity to comment on that.
The other one was around the eucalyptus. Again, I need to find it. I think that was Waipawa area.
Yep.
Yeah, just speak a little bit more about that.
So I might hand over to Ben for the
Okay.
eucalyptus. I guess the key headline is it wasn't probably a particularly good match for that location and the rainfall, but I'll let Ben go into a bit more detail around where the eucalypts are at and our plan on those sites.
Yeah, that's right. It's a you think of eucalyptus as a dryland species being from Australia, but these ones in particular, the regmans, they're a higher rainfall species. I wasn't around at the time, but I imagine the thinking must have been that because the blocks were going to be irrigated with wastewater, that would render them okay. Because we didn't Central Hawke's Bay District Council didn't go ahead with the wastewater plans, they've become really moisture deficient. And I can't remember if I included in that paper a map of what's died off, but basically we've lost 3.5 hectares in the Waipukaro block and about the same in the Waipawa block, so significant areas over the last drought we had. And so recently we've cleared those trees out and prepping for replanting. So yeah, it is definitely a challenge. Yeah, they're two very different blocks, and that the Waipuk blocks now, it's a really good community asset and mountain bike park, so it's well used, and it's more a sort of a long-term vision and dealing with that over time. We've got a lot of good native coming through in certain areas on the southern faces that will encourage. Other than that, it's sort of a strategic exercise around maximising what deciduous trees we can get in there, especially on the ridge tops. Fire moves quickly uphill, gets to the ridge tops and moves slower downhill. So if we can get our lower flammability deciduous trees on the ridge tops, it's a great thing. Native, as you mentioned, is and that's another good low flammability species, so we're getting that in there too. But the Waipawa block I've flagged in that paper, it's sort of the only block we've got that doesn't have a clear strategic purpose for regional council, and whether we keep that block or not will sort of steer whether how much work we're going to put into it.
Thank you.
Okay, thanks. I'll just pick up on that. As I said at the start, there's this kind of, you use the term portfolio, but it's a mishmash. So I guess it's the purpose of the original planting, and maybe that's for some of them it's evolved over time. But for example, even your own word, para 10, I think it's, this community use of I think that's eucalypt down there, Waipawa way. But you're kind of using the language of a public park, a regional park or something, as opposed to those things that I'm particularly interested in, separating those things that have any commercial risk whatsoever, because we deliberately had a commercial reason to plant them or have made that our reason to keep them or whatever, be it wood, be it carbon. Separate that bit out, and that's the bit that obviously should be reflected through our financials. And it seems like some of the stuff, there's decisions to be made, is this a public use asset or not, and the criteria in around that. Because if it's of no use as per the original purpose of it, or there's an example, why why don't we offer it to, say, Central Hawke's Bay Council? Why are we keeping it if the lens is only commercial? If the lens is public asset and like a park type discussion, totally different discussion and quite worthy. So if we can encourage a discussion in around that separation, I think we'll be all much better informed. There's the policy around those. So Councillor Foley talked about the carbon policy. The 24 hectares of commercial forest has been established on new land that is currently unvalued. So why do we not value something that's just commercial? This is item para 6.
Is that the river booms, councillor?
I think it might be.
Correct, yeah.
But
Yeah.
it says commercial.
It's under your executive summary.
Yeah, right at the start there. So either it's commercial or it's not. So you put it on the river to protect the riverbank or whatever it might be, then it's not commercial, is it? Are you going to harvest it?
Yeah, yep, that was the purpose. So there was about so we've only put in 18 hectares just the last winter. So it hasn't established enough to the point to have it valued. It's only a new planting. That's 18 hectares of it, and the other 6 hectares there. It's they're only a couple of small blocks. We could have them valued, but really there's that many variables in it. It's easy enough just to have an estimate.
Right. Okay. So what you're really saying is that they're too young there to be valued, but let's say in 20 years' time everything's gone to plan, they're going to be on the balance sheet with some value. My point is, if you use that word commercial, therefore it has a value. If you don't use it, it has public good value. That's my point there. And then finally, before I go to Councillor Curtin, the more recently joint ventures. Oh no, I'll just leave that one. Excuse me for a moment. All this discussion about the eucalypts, etc. And look, maybe the wrong ones were planted. We don't know. You don't know that until you're further down the track. Council was advised at the time of the internal rate of return was 6 to 7% was likely. This is Paris 36. So decisions were made on that, which is fine, whatever it was at the time. Can't quite work out, has it played out like that or not? Where I'm coming from again is I'm allergic to this public entity engaging in commercial risk like that. Someone else can make those decisions. So how did it play out? Because I don't think we're experts in commercial forestry, even though we have quite a few of them.
Yeah, there are that many variables. Like that forest map I've included in the attachments there. It shows you the range of species and management regimes, and it's a lot different than the radiata scene where you can value things and everything's clear and there's a well-defined market and processes to work from. But these alternative species, you don't really know what they're going to be worth until you go to sell them. So it's a very difficult exercise to value them. And I guess the other side of it is the carbon. We would, I haven't done the figures, and I can if the councillors want me to. But at the carbon prices the way they are, they would have well exceeded that rate of return.
Yeah, well, we might be looking for everything we can get. Just finally, 41, going back to this kind of public park discussion. This is the trail around Te Tera. And there's a little bit of commentary there. Is that part of our long-term plan, James? I've never really seen that kind of explanation, that we would like to have a full circuit around Te Tera like described there, but we can't at this stage.
Yep, so
am I the only one that's missed that? Sorry.
No, so it is a proposal, and there are funds in our LTP to develop that, but it's certainly not in the near view. But it's, look, it's an aspiration. It would be a fantastic, but it's certainly not in the near view. But it is on the longer term work program.
And define longer term?
Or outside of the 10-year view.
Right. So in at least 10 years, we think we might be able to have a full kind of trail around Te Tera as described there. I've been on part of it. It's fantastic, incredible asset. Yeah. And maybe that's a wider discussion under environment or something for another day, but really interested to see that there. Councillor Curtin.
Thanks, Chair, and firstly, a really strong paper. I'm very delighted with it. what it does is pull together, each of those forestry situations has got its own story. There was never any intent to develop a commercial forestry entity as such, and if you dive into those you can see the story, and we've fortuitously arrived at a place where we've got a substantial asset both from a commercial perspective, from a social perspective, and your community benefits. So each one of them is carries that story, whether it's Manuka or the waste management holdings down in St Hawke's Bay. Well intended, had good purpose to start with, and they've proven themselves. So I'd like to say that, and I don't know if there's any great benefit in unravelling the commercial aspect from those other elements which we enjoy out of them, including the carbon. So having said that, I think the merits of it are demonstrated best on page 101, which is the Waihapua comparison. And if that doesn't tell a story, well, we'll go home, I think, because it's a wonderful story. The couple of questions I've got, Chris, are having assembled our respective holdings, and we've identified those. They are an opportunity to play out in the community to landowners, the benefits thereof. I'm seeing this as a very strong adjunct to Ian's work in terms of right tree, right place.
Yes.
And I don't know if it's an opportunity to leverage that for that purpose. Have you had discussions that look like that?
So we have, and the working assumption, particularly with Waihapua, is that it becomes a demonstration site for landowners to go and see various species in action, particularly given the spectacular growth rates we're seeing on that property. There certainly have been a number of events held there over the last few years, but what we haven't done yet is to sort of form up the engagement and promotion campaign for Right Tree, Right Place. That work's underway at the moment, and the Waihapua Forest to be part of the mix of ways in which we demonstrate to landowners. It's obviously got a specific geographic site, and so it's going to have a relevance, to some but not everybody in the region. It's a long way from Parongaho, but certainly it's one of its great strategic benefits. And as I understand, the council at the time, in making the investment decision around Waihapua, had intended that it would be a demonstration site for that sort of activity. Yeah.
Thank you for that. I notice Will's not here, but I'd also be interested to explore the opportunities presented from the Central Hawke's Bay holding to do similar sort of exposure for that community down there, given that we've already got it. I do have a question in regard to and again, it goes back to giving it a go at the time with the eucalyptus, and just seeing how that fanned out. It's a bit like Manuka. We gave it a go to see what happened, and we've learned something, and that's valuable. But I'm a little bit concerned about the fire risk there. I've identified fire risk now. What can we do to manage that risk?
Yep. So look, Ben's all over the detail of that. So Ben, around our fire risk, and maybe generally in terms of our whole forestry asset, in terms of, I understand we're insured against fire risk, but more around those smaller Central Hawke's Bay sites.
Yes, the Waihapua block is totally grazed. There are young cattle all through it, so they keep the grass right down, which is probably one of the main factors in the eucalypt forest, because they're so light crown. They let a lot of sunlight through, and so you carry on with the grass growth carries on, and you get those fine fuels underneath, which can be dangerous. So in the Waihapua block we fully graze it. In the Waipuk block it's a bit different. We've got mountain bike tracks all through it, and hundreds of thousands of dollars worth of mountain bike tracks, so we can't graze a whole lot, so we graze the perimeter, and I've noted in that paper our main risk in that forest is from the western side. We've had land, our neighbour has subdivided his land down there, so we'll have lifestyle blocks popping up there soon, and they generally in forestry pose a significant fire risk. So we do have some tree clearing to do on that side, and it's about setting that up with a good grazed margin, then into some natives, low flammability, and then managing the trees, a nice high prune and low flammability trees. I've had Fens, Fire Emergency New Zealand, on a couple of trips through there and had advice from them. And going forward, the eucalypts, they will always be a high fire risk species just because of the nature of them, the volatile oils and the way the bark peels off. But it's about sort of managing our way, I guess, managing our way out of the eucalypts over time to a large extent, because we've got these trees. The regnans are the tallest flowering tree in the world. They get to 100 metres tall on a good site. But as a carbon forest, the question is, like a lot of carbon forestry, what do you do with them when they get to that size? So it's it's sort of taking the long-term view into managing back to a permanent native forest in those areas. I guess part of it too depends on the developing biofuels market, and like currently a lot of those regnans only have value as a carbon crop, but that might change depending on what happens with the likes of the Huntly Power Station trialling wood pellets and things like that. If that takes off, then we might, that would be great news for us, because then we could get rid of them and plant something more suitable.
Thanks, Ben. I wonder whether you could come back at some point with just a bit of a further risk assessment around the fire risk, not only from a removal perspective, if we want to move out of them over time, but also the day will come when the sun shines and we're going to have increased exposure to dry conditions, and what arrangements have we got with the fire service, adjoining landowners, fire breaks and the like, to manage the short-term risk while we get rid of them over time.
Yep.
That's fine.
Okay, thank you. Just slightly further that, if we were to, let's just say, get rid of for example, the eucalypts as just discussed, of course at that same time we've got to surrender the carbon credits, which are also on our balance sheet, and then maybe replace them with some new native planting or something, as you said. So again, there's an implication financial of all these decisions, even if it is we just let it go for a cycling park or something like that. So I'm just looking at the recommendations, Councillor Curtin, and although 77 and 78 next steps review the Waipawa forest, okay, then develop an approach for APRC carbon trading policies. Okay, I think you've heard a very strong interest in that is sorted, but the decision-making process, or at least the recommendations here, do we want to add anything to that, Neil? At the moment, we're just receiving this report and noting it, and again, compliments all round from everyone who's seen it. Next steps, how are we going to see the progress of the next generation of this paper? So you're going to consider, say, Waipawa, for example.
Yeah.
What's that process? When do we see that? I'm just wondering if we have something slightly more than we receive it, we note, or staff are going to.
So I'd probably see it as an annual update on our forestry portfolio in terms of reporting frequency. Look, the urgency around that site for us is probably in the less urgent basket of work, and we're also aware with Three Waters looming, we have a number of arrangements with wastewater discharge, so we need to work through those. But they're not urgent things that we need to work through, but we do need to make sure that we're only retaining those assets that are of the long-term value for us. So
we're bringing a decision to to part with any asset to corporate and strategic, I think, and I think the content of this paper is of interest to the council as a whole, and so I wouldn't see annual reporting on
the management of this asset necessarily has come into FARs. I think it would be better being reported annually to corporate.
To raise that with you, James. I think this paper, I'd like to see it in front of all councillors. We're very interested in this. Whether we just have a rerun at corporate and strategic or pass it on to environmental.
Well, I think that's a good idea. Why don't we rerun it? Let it go up. But in that discussion, I'm quite sure there'll be, because expectations have been raised, because everyone's learned so much, which is cool. And I imagine this committee, at some stage, whether it's reporting, say, on the balance sheet from the finance team or something, some of this stuff will be in there. Obviously not all, but some of it. So one small step for mankind kind of thing. So, okay, so then your suggestion, Neil, we'll just leave the recommendations as are, which we receive and note the forestry update report. And as I think Neil said, it'll be welcomed by councillors. There's so many issues in there. There's the commercial, the public good, fire risk, all this stuff. So I fully anticipate when it goes further up the chain, there'll be quite a large discussion on it and interest from our colleagues. Okay. Well, then the recommendations, we just note and receive it, so I'll take that on board. Councillor Curtin's seconded that.
Yep.
So that item is closed. Well, go straight into honey then. So let's just take this paper again as read. You've described it. Any kind of
just some key points. Obviously, the reason it's here is there was a Lagoima request on that activity last year, which ended up in some headlines.
Yep.
So as a result, we've gone away and put a paper together. The key headlines of the paper is from a honey perspective. It hasn't been as successful as some of the assumptions made initially, but certainly from a carbon value, that's more strong than some of the original assessments. And in terms of reforesting the land, it's been quite successful as a nursery crop for a considerable percentage of the catchment for Tutera. I think 12%, I think was the number off the top of my head. So we don't see it as a failure or a massive loss. Some aspects of the trial have not gone as some of the assumptions would have led us to believe. And I think I'm happy to pass over to Ben to maybe take you through any other key points, and then really just happy to answer any questions around it. It's, again, quite a comprehensive paper with all the details around the challenges of harvest, changes in the definition of Manuka honey, and some of the challenges of the various seasons as well. So it's quite a complex business, as you can see. Really happy to take questions.
Well, does Ben or Russell want to comment on anything here?
Yeah, I guess it was someone made the comment earlier about the extent of the loss, which if no carbon is sold, is around the realms of $800,000, which is a significant sum of money, and I guess that's indicative of the importance of where carbon sits in all of this. It's by far and away the biggest earner from the investment. And there's a table somewhere in that paper too, which indicates that the amount of carbon that would be required to be sold to A, break even, and B, achieve a return, council's required rate of return. So I guess it's just an indication of the importance when we do our modelling. And similar to the Tutera replanting decision, it's important that if we model to sell carbon, that we do follow through with it. Otherwise, our finances are not valid.
Russell, have you got anything to add to any of this?
Thanks, Councillor Frost. No, nothing really further. I would just add, I guess this is an external organisation, Convita, working in with us, so we're very much at their mercy, and Ben has done a great job working in with our caretaker at the same time, who has some restrictions, parameters around spraying, around that kind of honey period. So it does prove some operational challenges in the mix, but yeah, nothing further to add. Thank you.
Okay, thanks. And we did have a discussion when the news item first appeared, and or everyone's much more informed now. Again, personally, you know, and it's noted there in 7, when this was started, discussions around anything carbon were pretty much non-existent. So we kind of got lucky, actually, because if we didn't get lucky, as you say, 800k over a 50-year period, and you know, that's much too long. But again, having that carbon locked in there without a carbon policy means if we were to change the use of this part of this land, we'd have to surrender those credits. And so it's, yeah, there's just no free lunch here at all. Just a general question. This kind of, the trail around Tutera that we talked about earlier, is that through this area? Is the Manuka near that?
So we can ask Ben, does the existing trail go through part of the Manuka?
Or the proposed?
Yeah, the proposed trail, yeah, part of it would have gone through the Manuka, yeah. The Tutera walkway that existed prior to the plantation going in is that's always been the main walkway on the park.
Okay, well, I'll save that for another day, that discussion, because suddenly that's quite interesting. There's actually a price on putting that walkway through there, as per this discussion. Okay. Sorry, Stephanie, I can't remember. I don't think, did I ask you of any comment on this one? I'm sorry if I did. No, you're okay on this?
No, I'm fine on this one, thank you.
All right. Are you okay, Councillor? Sorry, go ahead.
I will comment because I think it deserves comment that irrespective of carbon and any other aspect, this has been a success. It's just unfortunate that it got it's got a failure tag around it when in fact the reverse is true. And you look at page 113 again, the comparator. Was that worth 800,000? You bet it was worth 800,000 to cloak the land with that, irrespective of honey and carbon. Again, well, I think we need to turn that into a win story, and make sure that we get the credit for it, because it was a success. A trial is a trial to tell us something, and it told us something, and I think we've done well out of it.
Yeah, fair enough.
And just further to that too, Councillor Curtin, agree with you there in that on another matter, besides carbon and honey, we have better developed biodiversity and both bird and plant species, so really exciting. And probably a lot of soil conservation as well.
And to Neil's earlier point, just that link, it's just not even mentioned there, right tree, right place. It's touched on with commission or something. I'm sorry, I'm going back to the previous paper now, I just remembered. Just that linking of all these things. And again, that earlier paper talked about erosion, but it didn't specifically mention the other policy we have in place, which cost us a fair bit of money. That'd be great. Okay, so well, the recommendation here is that we just accept and note this report, Tutera Manuka Plantation Update Staff Report. Are we comfortable that I move that and Jacqueline seconds it? In favour, passed. Thanks very much. Thanks, Ben and Russell. You're free to hang around or go. This is the Audit Committee. And there's a lot of interest in it.
Thank you.
Okay, 2 items to go. Internal assurance dashboard and our the talent item. So, okay, who's leading us in the internal? Is that Helen again or someone? Olivia? Okay.
Yes, sit here rather than
Are we okay? Yeah, all right, go for it.
Thanks very much. As you will have read, this is about the corrective actions dashboard on 3 remaining audits. One we may want to discuss after Leanna's done her talent management.
Okay.
That'd be up.
Is she on? Where is she? Oh, you tweak it.
So we have obviously the risk management maturity audit still to deliver. It's closed 1 this last quarter, if you're happy with the closure, and it has 3 behind and 2 on track. And then the final action on the response debrief report is on track to deliver for December 2022.
That's right. By the time I got to this, I was wondering if I'd seen the risk matrix twice.
But you love this.
Hey, I know, I love it. Look at the job I'm in. But anyway. Okay, well, nothing which particularly jumped out at me. There was something, but I haven't put a notation down which says it wasn't a huge deal. As you pointed out, the talent issue has been ongoing, so we'll address that at the next paper. You're quite right. Neil or Jackie or Stephanie, other than the talent side of things, do you have any thoughts or comments as to the actions taken? So this is in response to previous recommendations, as us saying, hey, have you carried out the recommendations that we all agreed upon? If not, why not? How's it going? That's the guts of this paper. By and large, things are on track. Again, it's great to have those closed ones lists because you often just forget, leave them there or paint them green or whatever you like.
Yeah. The only comment really, Mr. Chair, is just the ones behind, and I'm sure, like we've heard already today, that things are still in progress, but we're still behind. So really, just a bit more on that.
The ones behind are more to do with staff leaving and returning, which Helen Leffin has returned now, and so we're playing catch up.
Yeah.
So
into the microphone, please.
Sorry, so Helen Marsden did leave and has returned now, and so we're playing catch up. But
yes,
they are fast and furiously coming up. So.
Sorry. The one there about the draft bow ties complete. The early report had all bow ties complete. Leadership direction, improved linkage of risk-informed decision-making to strategy, improving clarity of boundaries for decision-making. What page is that on? 119, or page 1 of your table there attached.
Yeah.
Can you just reconcile the two? The risk one had all bow ties complete, and this one says draft. Is it just a timing issue?
I can confirm that all bow ties are complete. What we are doing with the bow ties is getting an external person to look at our bow ties to make sure they look full and complete in terms of how we've populated them. The piece that we continue, it's a bit of a continuous improvement really around the bow ties, is now that we understand the sort of domino effect of the risks within each of those bow ties, is actually now taking the opportunity to continue to strengthen our control environment and actually be very clear where the critical controls within those risks sit. So that's an ongoing process, is to continue to review those bow ties and strengthen the control environment, or validate the control environment in our critical controls. But the bow ties are all complete for all of the enterprise risks.
Thanks, Helen. So if we can just, I know the papers can't change them now, but have that reconciliation and what you just said there, Helen, there just links them up. And I know other colleagues who haven't been as close to this, also they may not see, but they may have forgotten the bow tie bits of this. But what you said there is this ongoing work. Now you're through the next phase, and we're bringing things down and et cetera, et cetera. So it's just we need to keep the room with us on this one. They're easily lost at page 94. Okay. All right, what do we need to do for that report there? Any comments? Because I think we've got a bigger discussion around the next paper. Are we okay on that? Stephanie, okay? Sorry, Neil.
Just a comment. Forgive me for comments today.
Forgiven.
This is it's a useful dashboard and certainly tells a story, because when you look at the red markings, it's very much around the people and our culture and managing that, leadership, etc. And it's indicating where we need to invest, and so I really like that about the paper, and because once you've got your line of sight on it, you can start doing about it, and the next paper's about that. So well done on that.
All right, thanks, Neil. So therefore, you'll move. Are we receiving this, Leanne? What are we doing? I've lost the recommendations now. We're receiving that report, noting. Okay, I'll second that. Pass. Thanks very much. Okay, our final item, 14, talent management internal audit update.
Liana's going to join us for this.
Liana, please jump up the front there, or wherever you're comfortable.
Good afternoon, everyone.
Hi. just note into the microphone so that people on the wall can hear you.
Should be on. Yeah. Just move over here. Okay.
Okay, the floor is yours to introduce us to this report. Just a quick history there, the intro, and it was a strong interest for quite some time ago.
Yes, so last time I came to this committee, there was a request to come back with obviously where we're at, and the last time I came we didn't have a strategy document or a plan in place. That plan has now been delivered to the executive team and I'm just waiting their sign off for that, but regardless of that, the PNC team have just carried on basically. When we're starting to do some of the things in that document, which in actual fact the PNC team are very excited about working on, because it's not the BAU that we're doing mainly at the moment, which is recruitment. So recruitment and the COVID work continues to slow us down a bit, but again, regardless of that, we're going to crack on with what we've got and start achieving what we've got in the plan. So the plan talks about, there's 3 different areas which I've got in the paper. It's around, I need my glasses for this. Hopefully they won't stand up.
I just want to interrupt. We've got another committee, so we need to be completed by 5 to 1 for them to prepare.
So I'm happy if you've just got questions, if you read the paper and have questions.
I'll lead with Stephanie, if you don't mind, and thoughts that you have, and then I'll just pass around.
Sure.
Neil, can you take the chair for a sec? Sure. There you go, Steph. Go, Steph.
Thank you. Thanks, Leanna, for the paper. Great to see a huge amount of work and that you've touched on at the beginning of the paper, and huge projects to deliver on with the various systems, the challenges, the constant changing requirements in a highly complex and technical area with all the considerable legal and organisational changes that we're dealing with COVID at the moment. So well done for that, and getting all this other stuff on track as well. I think it's great to see the plan has been delivered and in place, and my query that I've got is just sort of lining up the recommendations that we're asked to be recommending here around confirming management actions being undertaken, adequately respond to the findings and the recommendations of the report of that internal audit, and then talking about a yearly tracking update going forward. I'm just not sure if we have enough detail in your report here to satisfy ourselves that each one of those points highlighted by Crow has been addressed. Sure. So I'm wondering whether we might have a check-in a little bit earlier than an annual check-in, say in 3 or 6 months' time, just to check off against the plan, or whether we see the plan perhaps.
Yep. Well, I do have a work plan, and it's written in such a way that's for the team, but happy to share that with you. So it does cover off, if I can go through it, the things that were in that audit report. Say, for example, as a competency framework, which we'll have to start looking at, talent mapping, looking at, what have we got here? Leadership as a key driver in the organisation. So just at this moment, we've had a first cohort go through the leadership training, and that every part of the training or development area, because it's all new, I need to be working with the providers to see, and our staff, to see whether it meets their needs. So it's a bit of a trial and error at the moment, but that's all underway. And included in the paper, it wasn't there before, but we've added a change portion, as we've got a change manager now working in the team. So there's going to be some training and development of that area, and putting a change lens on everything we do. With the people experience, that's more around looking at improvements that we can make as a team in terms of every touch point that we have with the business. We've got in the Crow report, it talked about the council not having a human resource information system, and that still is the case. And we're still looking at going to a system, but in the meantime, we'll just keep operating with what we've got, which is manual processes, which have served us well, probably more so in a smaller environment, but now we need to look at how we can make it more efficient with something bigger and better. So training and development's there. I think one of the other things that I've put in this work plan is the gathering of more data and information, so that we're actually making informed decisions. So that's going to be a big piece of work for the team, is to actually be able to pull data out, look at it, make some recommendations to ELT and say, well, this is actually what's happening, and we can back it up with some data. So I don't believe we've done that before. Under the heading of sustainable workforce, I do talk about the competency framework, looking at a strategic workforce using the long-term plan that we've got, identifying what are the roles coming up so that we can be more prepared for the future. And I discussed with you the other day was the idea of the corporate alumni, which isn't in the plan, isn't in the Crow report. So you find that in my plan I've got quite a bit more than what was required, which I'm very happy with.
Chair, can I make a suggestion that Liana circulate to members of the committee the copy of the plan for your information, and in the annual reporting that she'll do on progress against the plan, all of the sort of the itemised items that relate to the Crow audit will be reported against, so you'll get to see those. And just a reminder, unfortunately this doesn't help you, Stephanie, but for the rest of the committee, our quarterly organisational performance report that goes to the Corporate Strategic Committee has a particular series of metrics in relation to our people and capabilities. So we've got that other monitoring tool in more real time, I guess, around things like turnover and training and development, those sorts of things.
That's a good idea if you're comfortable with that. I'm trying to balance out giving you the opportunity to share with us information and the clock behind me. So you've gone around. So Stephanie, have you spoken yet, Neil? Or?
Yeah, no, I haven't yet. And again, thanks, Liana. That's great to know that you've got line of sight. But following on from Steph's comments as well, the two notes I made were metrics and James's pointed to the quarterly report format so far. I wonder if we could look at reviewing those metrics and deciding whether additional items need to be applied, particularly in light of those corrective actions status report. You'll see those categories there, whether those metrics actually reflect what's in there. The other thing that I thought we'd covered significantly in our earlier discussions talking about the Crow report was the capability mapping, and I was hoping to see that there this time, so to know where what has been done so far and what does that look like. So it was mapping internally by work focus, mapping across the TAs, local authorities in Hawke's Bay, mapping across the region their specialist expertise. So we're quite specific about where the resources that we need are and how we can tap into them one way or the other. So I wonder how you're placed for that exercise. And I appreciate HR is significantly compromised because of your own problems in that area over the last 6 months. So.
I guess I'd like some more information in terms of what you mean by that, but more information to me about what it is you need, because we can do a talent mapping, which is internal, right, which is actually in the plan to do, and a competency framework, which also identifies what people need to have as part of their job and part of the organisation to move it forward. But mapping across the region, I'm not entirely sure what you mean by that.
Yeah, all right. That's probably the scale. I realise the time.
It's kind of a benchmarking thing, but yeah, thank you, Neil.
A little bit more than that to say, for example, what expertise have we got internally to expand? In other words, cover gaps that we've got professionally. what expertise, say, exists across the road at the maybe City Council that we could bring in,
Yeah.
or
The five chief executives of the local authorities in the region discussed on Monday this issue, and the request that had come from the councillors' strategic day for a discussion around shared services in particularly in these areas of short skills, where we think we've got probably actually a medium, possibly long-term challenge. And what we've undertaken is to do a piece of work on what some solutions look like. So I haven't yet had that conversation with Liana. That was only had on Monday afternoon. So there's a bigger piece of work. What you've got in mind, but it's going to take some time to do because everybody's running to stand still right now with critical shortages everywhere.
I may have misread that, Liana. In fact, it looks like it's in your work program. So it may be pending, but if we could just perhaps even have a discussion about where that's heading.
Well, one of the recommendations, Neil, is that you report to CNS. So there's further opportunity there to go into depth. The angle, it's a quite wider angle, but it's consistent with a whole lot of other discussions we're having when Neil's gone.
I can, Mr. Chair, I looked at, for example, recommendation 3, which is, I love this adequacy, evidence of the adequacy, I love that. All I think we ought to do at this stage is receive the report and perhaps when it goes to corporate and strategic, perhaps just expand on some of those, perhaps the metrics that you've talked about and that mapping exercise.
That's a good idea, and in the meantime, I totally invite Stephanie and Neil or anyone if they want to just have a further discussion with you about the matter, which obviously gets reported back up, to add to it. So I agree with Neil's suggestion there. So we're just receiving it, and the next report, obviously, I think will be a bit more info and those bits. But any clarification, please feel free via the leadership team or yourself to contact a member of the committee.
Thank you.
Okay?
Yep.
Apologies for kind of cutting this one down a wee bit.
Right.
But the All-Powerful Hearings Committee will have me if I don't finish this meeting very soon. Okay? So thank you very much. Thank you everyone on Zoom for your attendance today. The meeting is now closed.
The recommendation.